make sure it's recording, and there we go. All right, so the whole purpose of this, we are going to cover quite a lot of stuff. Let me just get to the agenda here so that we can go over it. So today what we will be covering, we're going to cover the difference between trading and investing and how we could utilize both to our advantage, especially right now with the way that the economy is, and how much money we would need to either day trade and how much you would need for investing. And then we'll go over the pros and cons of trading, as well as myths. We'll look at software and websites that you can use. We'll look at books that I recommend, equipment that you'll need to utilize and do this. We'll look at a software called Thinkorswim and how to optimize it. We'll look at how to get real-time data. We'll look at charts. What are candlesticks, chart patterns? What is support and resistance? What are exponential moving averages? What's MACD, VWAP? All these terminologies and lingo that we have as traders, and how it can help you and benefit for your trading. Okay, then when we get into the later parts of this is where we start to get into the bread and butter. So I definitely recommend sticking around because we'll start to get into how to manage your risk and optimize it, and then how to optimize the platform to kind of take the thinking out of trading, right? So we'll get into the psychology of it at that point. We'll look at how do I place a trade and different types of trades that you can take. And then we'll start to get into the secrets. So not quote unquote secrets, there's no secrets. You could do your own research and find these same things, but I'll give you my list of long-term holds that I'm looking for once we do bottom out, and I don't think we're going to bottom out anytime soon. We still have a long ways to go, in my opinion, but it is a useful list because I think it is promising. And then we'll look at some biotech stocks, some pharma stocks, and those are going to be our day trades or our short-term swings, where we're going to hold for maybe a couple of days and try to capitalize on some gains. And with those gains, then use that to invest for the long term. And then at the end, the last but not least, we'll go over my cheat sheet, which will be an A through Z walkthrough of about 10 steps or so on how I set up my trading and what I look for in my entire practice that I do every single day. So then you can also incorporate it, change it up, or mix it up, okay? So quite a bit to go. And just real quick before I continue on, I just want to make sure you can hear me. So there should be a little hand raise button. If you could just raise your hand so that I know that you can all hear me, that will definitely help me out. Okay, so a little more than half of you. Okay, so we should be good. Alrighty. So before we get and dive into the PowerPoint stuff, let me just exit real quick and do all like the introductory stuff first. This way you kind of know where to go if you need to get a hold of me after this video. So this is our website, stockmarketwolf.com. If you do not want to take our paid stuff, we do offer a lot of stuff for free. So you can hit this join free button and it'll take you directly to the page where I host all my members. And there's a lot of free content within there that I provide, okay? If you do want to pay, you will hit this join premium, and these are the premium services that we offer. The most commonly one people get is the lifetime, believe it or not. Right now we're doing 50% off, so it comes out to $14.99. And due to the coronavirus, we're going to start implementing payment plans. This way you can still benefit from all the things that we offer for lifetime, which lifetime essentially you pay once and you have lifetime access to our group, and then you get all of our premium courses. So if you enjoy this free stuff, trust me, the paid stuff, it's over 17 hours worth of content, and it's crazy. This is only going to be 2 hours, and it's going to be filled with value. And if you want to get to know a little bit about me, you could go to the website, hit this About Us, and then here's a little bit about me. So just to give you a little quick intro about me, because some of you are coming from Instagram, some of you are coming from Facebook, some of you from YouTube or from other pages or friends. So just a quick little bit about me. My name's Andrew. I've been trading for the past 10 years. So I started when I was 19. I was a single dad at the age of 19. And from there, I went on to do my education. So I have a bachelor's in biology and 2 master's degrees, one in which is Master of Science in Biotechnology, and then the other is an MBA with an emphasis in finance, okay, which I was able to get all that done by the time I was 27. Okay, I am a family man. I have 2 kids, my son Tay, then my youngest son Reese, and then my beautiful wife Kai. And in terms of trading, like I said, I started when I was about 10 years ago. When I actually started, I started learning when I was 18, and I started getting books, and I'll show you those books here in a second. And then I got different mentors. So like Ross Cameron, Timothy Sykes, Cameron Foose, those are popular names within the trading industry that a lot of people are familiar with. So I went through all those programs along with other programs, and then I've been able to be successful with trading, and hence now we started the Stock Market Wolf business. Back in 2018, we only had about 50 members. 2019, we had 3,500, and then now it's obviously exponentially growing, and this is all just through word of mouth. I haven't done any Facebook ads yet. We haven't done any funnels or things like that. So it's really cool to see just by word of mouth how much it's grown within just a year. And if you need to get a hold of me, you could go to Instagram.com/stockmarketwolf. And within here, you could DM me, and I answer every single DM myself. I run this Instagram by myself. And the same thing here, we only had like 1,000 followers back in 2018. Now we have 21.4 thousand, which is pretty cool to see. And our YouTube, which I haven't really worked on just yet, but we do have a very cool 3-hour introductory type of day trading crash course, which will be similar to this. So more content will start to get added to here, but those are all the streams to kind of get a hold of me if you need to get a hold of me. And those that know me personally, just send me a text, and I always try to do my best to answer. Cool. All right. So with that said, let's go ahead and dive into the presentation. Okay. All right. So what is the difference between trading and investing, and how can I take advantage of both? So on the bottom left, we have the famous Warren Buffett. And on the right, we have Jesse Livermore, okay? Which, if you don't know who they are, I highly suggest you look them up. Both are very popular in the stock market world, right? So investing, you're typically going to hold longer term. It's a buy and hold type of thing. You're not gonna really care about what happens within the day. You're not gonna care about what happens within the weeks or months. You're in it for the long haul. Obviously, you're going to manage it to a certain extent, but you care about the long-term aspect of it. Versus trading, you're looking for a shorter term. And as a result, you're going to have much more transactions when it comes to trading. All right. A trader could be in a trade for 5 minutes, be done, and then find another trade 10 or 15 minutes later, and then trade that for an amount of time. All right. Then in the mindset, it's part of the company, right? Versus for us, we're looking at returns in the shorter term. So as a long-term investor, you're looking at maybe something to grow 10 or 20% within maybe a year or two. As a trader, you're trying to look for those returns in one day, but with a smaller amount of capital, okay? And the idea is you'll compound that over time. All right, so as an investor, you're much less sensitive to the short-term price fluctuations, as I was talking about earlier. As a trader, you are definitely sensitive to what goes on minute by minute, okay? As a long-term investor, you're gonna have low commissions. So if you're using a platform that charges a commission fee of, say, $6.95 for a buy and for a sell, so $14 round trip, if you take one trade, that's it. As a trader, if you're taking maybe 20 trades in a day, that's a lot. That starts to add up, right? So you have to make sure you're profitable when you're doing that type of those types of transactions. As an investor, you're more concerned with fundamental analysis. So you're looking at PE ratios, cash flow, and balance sheets, etc. For the purpose of this little lecture, we're not going to get quite too much into PE ratios, balance sheets, and cash flow, and business ethics and stuff like that. But that is extremely important when you are looking to invest, and I can help you with that. That's where the MBA comes into to help with the background in finance. But if you need that type of help where you're looking at for the long-term holds and you care about all of that stuff, you could just send me a DM and I would love to help you out with that. Okay. Now on the trading side, we're again sensitive to the short-term price fluctuations, obviously paid more commissions, but as a trader, we care about the technicals. So that's like the chart patterns, that's the indicators. And a lot of people think that both of these have to be separate, where you can't be a trader and you can't be an investor, but you can use both to your advantage and have an idea of how to look at the fundamentals, which are the PE ratios, the balance sheets and stuff, and be able to read the charts. And that will make you a much more rounded trader overall and a better investor overall. Because instead of just looking at news and all of this stuff, you can actually see where should it be where I enter, where should I start to look for indications to sell, right? So if you have both under your belt and within your arsenal, it's just going to make you that much more of a better trader, in my opinion. Okay, now what are the pros and cons and myths when it comes to trading? Well, the pros, this is a picture of my trading setup when we were in New York. So one of the best pros about trading is all I need is a laptop and I could do it from anywhere in the world. Okay, as long as I have internet service, I could be at the park, I could be on the plane, on a trip, which obviously no one's going on a plane anytime soon, but you get the idea. You could do it from anywhere in the world and it's your own time. So I try to do all these different things like drop shipping and doing like big bulk sales on Amazon and dealing with customers and all this stuff. But trading, it's just you and yourself. It's just you and your laptop with your techniques and your trading. And then if you're in a community like ours, you have other people with the same mindset looking at other things that you may not be looking for that you could benefit from. But all you need is that laptop. If you have a secondary screen, that makes it a little bit better, but essentially the only tool you need is the laptop. The cons to trading is that it does take time and you do need to have the time to trade. So if you are day trading, you're going to need usually the first couple of hours of the market open, which I'm on the West Coast. So the market opens for me at 6:30. You need at least 2 hours into that time to be able to trade. So anywhere between 6:30 and 8:30, as long as you can allocate a minimum of 10 to 30 minutes within that time frame, you could be okay. And then the last 2 hours leading into the close. So the market closes for me at 1:00 p.m. So as long as you can take a trade anywhere between 11 to 1, you can also be successful. And that's leading into what we call the power hour. You can also trade pre-market and aftermarket hours, but sometimes the volume isn't quite there. And then, so it does take time. If you don't have that time, then there is still advantages that you can do. You can swing trade, you can buy and hold and invest for a little while. There's still a lot that you can do. And all of the things that you'll learn here can be applied to that. So it's not just for day trading. All of these techniques you can learn and apply it to another practice. All right, now there are myths involved, where one of the myths is there's no risk. There's definitely risk. But with that said, another myth is that trading is gambling, and it for sure is not. With gambling, usually the house is favored, right? And you're playing an odds game. Here, if you have the right strategy and take the right approach, you can be profitable. And I'm a clear example of that. When I first started, I was gambling because I didn't know what I was doing, and that's how you lose quickly. But if you develop a strategy that enables you to win, you can start to compound your money as long as you stick to it and you are disciplined. And we'll cover that as we get close to the end, okay? And then yesterday, what I did was ask questions throughout. So what I would ask for you is, if you have questions through any segment that I'm talking about, jot it down on a notepad, and at the very end, I will go by person and ask, and you can ask as many questions as you want, even if it's 3 hours worth of questions, so that I try to answer all of your questions. Okay, so, but what I would ask is, as I'm going through these segments, just jot it down on a notepad and then ask me at the end. Okay, this way we could kind of just get through the presentation and then get into the nitty gritty of your Q&As at the end. Cool. All right, so software. What do I need for software? Well, these are some really good websites that I recommend. This is MarketWatch, this is Benzinga, Finviz, Investopedia, and then this is the platform which we use is Thinkorswim. So for the softwares and the websites, this is Benzinga. Okay, this is a very good website to get a lot of news, especially real-time news. If you have a subscription, which you don't need, but if you do, you could get even better news and kind of segment it to what you want and only looking for. But there's a lot of great ideas in here. They even have ideas for long ideas to take a long position, short ideas. They have technical analysis on different stocks. They have news articles from the press. They have ratings and different things like that. So this is a very good site to use. They even have an education tab, so you could go through their education platform. And then MarketWatch. So MarketWatch is a very similar thing. I use this very frequently to get my news, and it comes in all at once. So anything when it comes to like the president talking or any type of news related, especially right now to the coronavirus, MarketWatch is extremely fast and extremely real time. So I love being able to look at this. And actually on Friday, which was yesterday, we used it to our advantage with the stock that made 500% return. It was BLPH. They had FDA approval for one of their products. And as a result, that stock jumped up 500%. The news came out at like 4 in the morning, which was during the pre-market hours. We were able to capitalize on it and make $4,000, which you can see right here. If you go to my Instagram, if you click on here, this is a live shot of the at real time of profit of 4,000 when we were in this trade of BLPH, which essentially went from $5 all the way to about 30, which was insane. And I still think there's room for that to grow, but we'll see and analyze that on Monday. So MarketWatch is great. And then there's Finviz, and I'll show you how I use this when we get into the trading piece. But the cool thing about this is that this is essentially a screener. So right now, obviously, healthcare is really big. So you could come here. Let me go to the home page so that we could navigate this together. You could come here and go to screener, click on this little screener tab, and then I'm going to hit all right here. Okay, and it's going to open all of this. And now I could pick a sector. So sectors are, you know, if I want to look at healthcare, right, which biotech and pharma kind of fall under that. Maybe I want to look at healthcare and tech, but let's just say healthcare for right now. As soon as I hit healthcare, we're now going to look at 916 stocks. Okay, so it kind of filtered from those thousands to 916. But now we could filter it even more. So maybe I only want to look at stocks that are less than $30. Okay, and so now of that 916, it shows me 739. So then I can continue to filter through here, narrowing down my selection. And then once I have that selection picked, I could quickly scroll through the names here and look at the charts and see whether it's downtrending, whether it's uptrending. And then if I was to click on one, let's just say maybe ADAP, I can see its chart. I could get more in-depth information. I can also look and see if there's any news related to this stock right now, especially maybe if there's any FDA approval things or if there's any studies related to it, whatever the case, right? So this website is an amazing website. I highly recommend it for you to use, okay? The next one is Investopedia. So this is like essentially your encyclopedia of everything you need to know when it comes to investing, when it comes to trading, etc. So they have a simulator that you can use in practice. They even have an academy where you can learn and educate yourself. So there's a lot of cool things in here for you to get acquainted with, okay? And then within the Thinkorswim platform, which we'll cover here in a second, this is Thinkorswim. And I what I did in the PowerPoint, I'm going to give you this PowerPoint presentation at the very end. Within the notes of the PowerPoint, I provided all the links on how to get to here. So within there, it will show you how to go here and download it, et cetera. But one of the cool things when you're in this platform is you can hit this education tab and it'll open up. Sometimes it kind of is laggy. There it goes. It'll open up and you can select what you want to learn. So if I want to learn about stocks, I can hit this stocks thing and there'll be all these different classes along with like progression points for you to go through your training. There's stuff on option trading, which we're not going to cover in here. There's things on bonds, mutual funds, futures, Forex, personal finance, strategies and ideas. So there's a whole list of education in here that's free, that comes just by signing up for their software, which signing up for their software is free. Okay. So there's a lot of great education out there, as well as YouTube videos that you can benefit from. So these are the platforms that I use on a very daily, consistent basis. Okay. And we'll cover how to use them as we go on with the PowerPoint. Right. So then going back to the PowerPoint, and as you can see here, here's all the notes, right? So I have the download link for Thinkorswim. I have the FinViz website along with a search bar here for tutorials if you need to learn how to use that program, etc. So a lot of useful stuff for you. And you know what, I'll just go through it like this, so then I can just kind of click and then so forth. So I always get asked, what are some books that I should look into? And this is obviously of books, but my favorite books are here. So How to Make Money in Stocks, Trading in the Zone, Market Wizards, The Intelligent Investor, and How to Make a Living Day Trading are some of my most favorite books that I've read throughout my career. There's been other books that have come out from those, but they all essentially say the same thing, or are just a variants of one another, right? So those are my top picks right here. How to Make Money in Stocks, Trading in the Zone, Market Wizards, The Intelligent Investor, and How to Make a Living Day Trading. All right. And now, obviously, for options, we're not getting into that yet, but I do have a selection for option trading. So if you are interested in option trading and books, you can always message me. Okay. The next piece that we're going to cover is what equipment do I need? Now, obviously, on my setup here, I have 4 screens. I have 2 up top. I have a long ultra wide and then my laptop. Now I'm a little overboard, right? I've been doing this for 10 years, multiple things at once. All you need is the laptop, okay? And maybe just another monitor, just so that you can have a bigger window to kind of see things. And at the very least, a portable monitor. So if you ever travel or something like that. But here's a kind of breakdown of all the kind of stuff, and I even provided links for you here. And again, you'll get this PowerPoint at the end. But for laptops, anywhere between 500 to 5,000, you're gonna find a great laptop. You may even find one cheaper than 500. But the main requirement is that the laptop has to have at least 16 gigabytes of RAM and at least 15 or 17 inches. If you have a 13 inch, it's gonna be very hard for you to see the screen. So please make sure that you have at least a minimum of a 15-inch laptop, okay? Sound good? Cool. And then I provided links for you there. And then monitors, you could get away with spending $250 anywhere to $1,000 for a monitor. You could go crazy like me and get an ultra-wide gaming monitor, or you could go conservative and get a 24-inch monitor, whatever the case. So I provided some links there for you for some monitors. You obviously will need a monitor stand if you have multiple monitors, so I provided a link there. And then a USB hub. So a lot of the times, if you have multiple connections, just having the laptop connection or the desktop connection may not be enough, so there's a USB hub for you. And then keyboards. So I like gaming keyboards and gaming mouses because they're quick and then they're efficient in order to utilize when it comes to trading. So I provided some links there for you to use. Okay, so if you're looking at an overall setup, you're looking maybe $500 for a laptop, maybe $250 or less for some monitors, and then all this stuff right here is relatively cheap, probably maybe $100 there. So you're looking at like a grand total of anywhere between what's that? That's 750, about 800 bucks for 800 to 850 of a good setup. And sometimes you could get away with a cheaper setup if you find the sales and stuff like that. Cool. Now we're gonna start getting into the Thinkorswim piece. So I always get asked, how do I have a setup like myself, right? So people ask for my setup. Here's the link on how to do that. So what you're gonna do when you open up this PowerPoint, you're gonna copy this link here, and I'm gonna walk you through the steps right now. So you're gonna copy this. You're gonna open up your Thinkorswim application. You're gonna go here to this setup. You're gonna go to open shared item. You're going to paste that copy in here. You're gonna hit preview, and then you're gonna hit open. And then on a secondary window, it'll open up what you just copied and pasted. And when you blow it up, this will be the platform. And then to save it, you'll just hit this right here and hit save flexibility grid. And then you can name it whatever you want to name it. Cool? So that's how it's done. So if you missed that, you could just rewind the video and then come back to it later. All right. But this is the platform and this is the setup. Okay. And then another thing that you need to do to optimize real quick, you need to go to application settings, go down to system. And within system, you want to make sure that the quote speed says real time, no delay. Because if you are day trading, you want to make sure you have the fastest real-time accurate data of what the current price is. You do not want a delay. Even a 3-second delay can kill you. So in terms of entries and exits. So make sure you have that selected. Cool. All right, which is what we just went here. So in case you need that. All right. So candlesticks is our first topic when it comes to trading. And this is the anatomy and breakdown. So we're gonna have a green candle, which is gonna be a bullish candle. And we're gonna have red candlesticks that show on our chart, which would be bearish candles. Now they look very identical when it comes to their overall makeup, but there is one big key difference, okay? A green candle, the base of its candle is where the price of that candle opened, okay? And the top of it is where it closed. And these little white marks that come out are essentially the range during what happened within that certain time frame for that candle. Okay, for a red candle, it's the opposite. The top base of it is where it opened and the bottom is where it closed. So it opened higher and closed lower, and that's why it's red, right? Because we're going down. So to show you a representative of that, if we look over here, we obviously have a lot of different candlesticks, but over here I'm looking at a 5-day, 5-minute time frame. So what this is going to show me is 5 trading days, which are represented in the black. The gray is the pre-market hours, or the aftermarket hours. Okay, so I have 1, 2, 3, 4, 5 trading days, and each candle is going to represent 5 minutes. Okay, so when I come in here and I zoom in, this is what happened within 5 minutes. This is what happened within 5 minutes. And overall, together as a collective, it's what happened within that day. Okay, so going back to the green candles, a green candle opens at the bottom and closes at the top. The wicks are the range on how that candle performed during that time frame, which our time frame is 5 minutes. So if we look at this candle here, within 5 minutes, the price opened at a price of 237.43, and it went up to a high of 239.79. Okay, it actually went a little bit higher to 239.79, but then it closed at 239.35. Okay, and at one point it even went to a low point where if the price opened here and now the price is down here, the color wouldn't have been green. It was red at one point, and then as it started to go up, the color changed to green. Okay, so a green or red candle could be the opposite during a certain time. It just matters what happens at the close. Okay, and so for the red candle, the price opened here At one point it went up, which made it green, but then people started to sell off within that 5 minutes, and it went down here to 237. People started to buy it back up, and then once the 5 minute time hit, this is where the price closed, and then we had the next candle open. Okay, so that's how the candles work. Now, there are different things to be aware of when looking at candles, like the strength of a candle. So this is obviously a strong decision as a collective to start selling. This is a strong decision as a collective to start buying. These little thin ones are what we call dojis. These are signs of indecision. These are signs of, at this current price and at this current time, I do not know whether to buy or to sell. That's why you see no real difference within that 5 minutes. Okay. Now, depending on where those lie on the chart can be indications of a sell-off. So if you're currently moving up and you have a doji candle right here, and you have this sign of indecision, this can mean, hey, we may start to go down. And that's exactly what happened. People started to sell off. They weren't decisive and didn't have the demand to continue to buy at a price of 244. They're like, this is getting too high. I'm going to start to sell. I'm going to take my profits. And then the price dropped. Okay. If you have an indecision candle down here, then that may mean you've reached the base of people selling, where you were selling. And if you had a doji here, then it could say, hey, we don't know whether or not to continue to sell, or if we should start buying. And then if the next candle is a buy candle, then you may start to see a signal back up. Okay, so that's how the dojis will work. But the candles themselves tell a very telling pattern, and a very important pattern when looking at charts, right? And so we'll get into the chart patterns here in a second, but this is the 5 minute time frame. And if I was to change this over here to the daily time frame, we can see what the daily is. And when people say the daily chart, what that means is we look at a 1 year time frame, a 1 year span from today back in time. So we're in April, so we're going to look all the way back in April of 2019, and each candle will represent 1 day. Okay, so these no longer represent 5 minutes, these now represent 1 day. So this shows you the movement of what happened within that day. Cool? And obviously if you change it, so the left side of this is the time frame that you're looking at, and the right side of this is the time frame that the candles will represent. All right? And as a collective, they'll start to form a pattern. All right, and we'll start to get into that in the next topic that we start to talk about, which will be chart patterns. Okay, now these are very simplistic graphs and representations of the chart patterns. And you know, for presentation's sake, maybe I should blow this one up just so you can see. So these are reversal patterns, meaning sometimes you may have a stock that moves all the way up. It may bounce to a support line, move all the way back up to a resistance level, and then bounce. And then instead of falling at the support line, will continue to drop. So this will be an area somebody would short, meaning they're betting that it's going to continue to go down. Okay, so these are the patterns for those types of reversals. Okay, and then these are examples for going long. So this is for a short position, and this one here, which is a double top, a double bottom would be to go long. So instead of starting to hit resistance, you may start to break out and go towards the upside. Okay, so that's what we mean by going long. You're going to buy low and expect to sell high. Shorting, you're going to buy, or essentially borrow shares high and then sell them back, buy them back at a low price, right? So that gets a little confusing, but we'll get into the shorting in a second. But many of you are going to be in this area here where you're going to buy low and sell high for a capital gain. Okay, then there's continuation patterns, and which will represent and look like this. And then there's bilateral patterns and different things like that. Now, all of this, a lot of the times, sometimes is useful, but I look at other indicators that are important to me, which we'll cover. But some people like to base their trades off of patterns. So if you recognize and are good at recognizing patterns, then this may be useful. And on the note of patterns, they typically are better and more used when it looks at maybe blue chip stocks or looking at a stock on a year chart versus a smaller time frame. Okay, So then going to the next topic, going back to the presentation, another very important topic we're going to get into is support and resistance. So you're going to have a movement of a stock that's going to go up. And once it hits a certain peak or price, people are not going to have a demand to buy at that point. So people may start to sell off. Or this move here was 10 or 20%. And now they feel they want to sell their position and make profit, right? And as a result, it'll drive that price of the stock down. And then later on, you'll start to go back up, and then you'll come back down. But notice that we hit a bottom here, and we hit a bottom here. We don't quite go back down to this level. So this level here is going to be our support level. Okay, this is an imaginary line that we draw to say, hey, at this price, maybe this is $2. At this price of $2, every time I hit a peak and maybe hit 3 or maybe hit $7, but come back to 2, I don't drop much lower than 2. So I know 2 is a pretty strong support. Okay, so then you'll have another instance where you go up, maybe come down a little bit and go up. But then you're noticing at this level and peak of maybe $7, this is now an area you can't get past. You haven't quite broke $7 and gone into $7.50 or $8. So this area right here is now a resistance level. Okay, a resistance level just means we haven't broke that level yet. It's holding us down. A support level is holding us up. Okay, and again, they're imaginary lines because once we break this level, which is now a resistance level, here, now that we're above that price of 7, that 7 could hold as our support. So they're not finite. So it depends where that candle is in relation to the line of whether or not it'll be a support or a resistance. So if we're below the line, it'll be a resistance level. If we're above the price of that line, it'll be a support. Okay, and at any one time, those two can change. So here on this side, it was a resistance. Here now, it can be a support. And then what we'll find later is that we may form a new resistance line later on, and then the pattern will go on and so forth. Okay, and as you break this, then now this line will be support, and then we may hit a new resistance. Okay, and as resistances can break, so can supports. So if we were to do a reverse image of this, a support line could break at any one time as well. Again, they're just nice guidelines for us to be able to utilize. So if we were to put this into real-time practice here, we can use this little toolbar right here and hit this little money sign, which is the price level. And if I hit this, what it'll do is draw a perfect horizontal line across. And for me, I like to base my supports and resistances if it hit a certain level at least 3 times. Okay, and I usually base it off of the close. So I can see right here is a resistance level, and I'll use this little selection here because here during this time we couldn't get past this price of 245. Over here we couldn't get past 245. Right here, we couldn't get past 245. We did a little bit, but came back down. Also here, we did a little bit, but came back down. Again here, 245. And again here. Finally, here is where we broke it. Okay? And I see a support line right away. So when we do sell off, where do we have a level of support? And I can see that right along here. Here, we hit this resistance line, come back to support. We break that resistance line, it becomes a support for us. We drop back down that support line, it now becomes a resistance line. We hit this support, move up to resistance, and so forth. So you just go along drawing these patterns and kind of see where there's those levels of support and resistance, where it bases out and where it hits a peak and starts to sell off. And that will present a pattern for you. Now, this is important because if you're looking at this, even if for a long-term play, right, or even a short-term play, if I'm thinking and considering about taking a trade, And I notice, we'll just use this side over here, for example. Say the price is 243. If I don't have these drawn in, or I don't have an idea of historical trends of what's going on, I may buy in, but since we are smarter and we have these lines drawn in, we say, okay, well, if I'm getting at 243, I see that there's resistance at 245. That's really not an opportunity for me to make a whole lot of money, because based off of history on the past 1, 2, 3 trading days, every time I hit this 245, I dropped back down. So it may behoove me to just wait and see if I break that 245 level first, and then ride that wave until the next resistance level. Okay, I don't want to get in too soon at the resistance level, because if I buy here and it hits 245, it could start to sell off, which is what happened here, right? It hits close to 245, which is resistance that it had multiple days prior, and then dropped all the way down to 226. Okay, so had you bought here, you would be in a really bad position right now, because you would be negative. Okay, so that's why supports and resistances are important. Then on the flip side, we look for supports to be potential entries, right? So here on these levels, and I'll color them green, here's a support. Here's the support. Okay, we can see that it's above that line. And then here's the support. Edit properties. And it's above that line. Here's the support. You get the idea, okay? So when you see a support line, you don't want to buy in just yet either. You want to wait for confirmation, because you can have an instance like this where we broke a support line here and we broke this support line, and finally on this support line is where we caught our grounding. Okay, so what you want to wait is for what we call confirmation. Now what confirmation is that if you do hit the bottom, which is now support, what you want to wait for is green candles to confirm now a move back up. You do not want to get in yet if it's still a red candle, right? Because red means that we're still dropping. You want to wait for a couple of green candles and a move back up before you decide to take that position. And then where you're expecting to start to sell a little bit is when you hit the first resistance level, and then maybe the second, okay? So that is how you would use support, but it's extremely important to wait for what we call confirmation, okay? You do not want to get into a situation like this where you get in thinking that it's going to go up, right? So if I zoom in over here, this will be the example of not to get in, right? We're at a support level, but we have multiple red candles, and guess what happens? We break support and we continue to drop, okay? Then we go back up to resistance and then come back and we hit this support level, followed by multiple red candles, and then we continue to drop, okay? So you want to wait for a move back up before you decide, all right? Obviously, you don't want to wait for too big of a move where you're now next to resistance. You want to wait closer to the support level, all right? So that's how supports and resistances work. Hopefully we're all good there. Next is going to be EMAs. Okay, so you know what? Let me detach this, and we're going to build on it one piece at a time to make things smooth. So what I'm going to do is I'm going to get rid of this. I'm going to get rid of this. I am going to get rid of all of this nonsense over here. And I'm going to get rid of all my studies, and we're going to build on it together so that it is a very clear image for you. So remove all studies. And so all we're left is just with the chart. Cool? All right. So we just drew supports and resistances. Now, when I draw these, the main time frames you want to look at is the year chart. So you want to go back and you work left to right, okay? So if I'm working left to right, I want to start left and I want to note and see downstream when I see resistance level. So I see one clearly here. I see another one over definitely right in this level, right? Here it hits once, twice, 3 times, 4 times, 5 times. All this levels right here can't pass that price of 300 bucks. Then we see one about here. Then we see another, a little one right about here. Then we get into here. And then right there. Okay, and then we have our support level. So when we drop down, we see that we have support here, here, okay, and then a little here. This is where it starts getting really crazy. All right, so it's important to draw it on the year time frame and then look at a 5-day, 5-minute time frame just in case you miss anything. So what I like to do when I do draw them in, for the long terms, I'll keep red. And then when I do the short term ones, I'll color them a different color like blue or something like that, okay? And you can do that by right-clicking and editing the property and changing the color, all right? But since I already colored this red, we'll just leave it for now. The next thing is EMAs. Now, just how support and resistance tell us to potentially buy and sell, so do EMAs. So if I put that in here, I'm going to go to Studies, Edit Studies. I'm going to type in Expo, and it's going to say Moving Average Exponential. I'm going to add 2 of them, okay? I'm going to make one a 9 EMA, and we'll leave this cyan. And I'll make this one here a 20 EMA, okay? Now what the EMAs are is there's a math formula involved, and it takes the average based off of the time frame that you have it set. So this is and it's all relative to the time frame that you're looking at. So we're looking at a 5-minute chart, right? A 5-day, 5-minute chart. So the 9 EMA is taking the average of the past 9 candles from the current candle, which the current one's always going to be on the far right, and it's going to take the average of the past 9 and draw a trend line. So it's always going to be respective to the candle and start to trend a line for you. The 20 EMA is going to be the same thing, but except instead of a 9-period time frame, it's going to take a 20-period average. Okay, and then when you change your time frame, instead of being a 5-day, 5-minute, and change it to be a year, it's now no longer taking the average of the past 5 minutes. It's now taking the average of the past 9 days, right? Because on this one, we're looking, each candle represents 1 day. So if it's taking the average of the past 9 candles, is taking the average of the past 9 days. So then this 20 EMA is essentially taking the average of the past 20 days and charting it for you, okay, on a trend line. Now these are important because these are extremely important buy and sell signals. When we have a cross of the 9 EMA above the 20, this is a buy signal. So here we have a cross. This would be considered a buy signal. Okay, here's a cross of the 9 EMA above the 20. This would be considered another buy signal. Okay, and we get one here. This is an example of a buy signal. When we have the opposite, when we have something like this, and this is what we're looking at a 1-year time frame, all right? We have the 9 EMA cross below the 20 EMA. This is a definite sell signal, always. When you have something like this, this means you want to start looking to get out. Now it's crazy because if you were to pay attention to technicals, which is what we're doing. This is when we're charting and when we're looking at all these indicators and the supports and resistance, this is considered technicals. If you were to just focus on technicals, you would have noticed on 2/24 of 2020 that the S&P 500 was headed for a downtrend. Okay, then obviously now we have all this crazy news right afterwards, even I think a little bit in January, but this is the time where you would have wanted to start taking out your money before all of this stuff happened down here. This cross happened at 3:30. the current price of the S&P 500 is 228. You would have saved yourself about 100-point drop, right? We can look at another stock. Let's look at Facebook. Let's see if we see a similar thing there. Okay. Here is a buy signal. Okay. So if I change this to green, we can see at this point here, that once we get this cross, it goes from 180, which is also, guess what, at now a support level, and it goes all the way to this resistance level to 190, breaks this resistance level, and then goes to a high of 205. So it went from 180 to 205. That's a nice little area to make profit. Okay, that's a great buy signal. Here's a sell signal. Okay, that's the time to be out of a trade if you were in it. It's also a time where you can short if you're not in a position yet, or you want to take advantage of both, right? Here's another cross right here. So here's a buy signal. And here is our big death cross. Okay, so here's an initial one to say, hey, we're going to start to sell off a little bit. There's a little bit of a bounce back up, and then boom. Here's our cross of the 9 EMA below the 20. This was on 221 of this year, and this was at a price of 212. Facebook is all the way down now to 149. So if you were just paying to technicals and looking at the long-term frame here, which is this is the year chart, as an investor, as somebody that's buying and holding, as soon as you saw this, this is a time to get out. Okay, so I'm giving you tips right here for those that are looking to just buy and hold, or when to get out of trades, when to get out of my positions. How do I know? Technicals tell you first and foremost. So here was our warning sign. The warning sign happened in early January, and then once February hit, here was the definite warning sign to get out. And from there, it just continued to drop. So when you have the 9 EMA below the 20, it's a sell signal. When you have a cross of the 9 EMA above the 20, it's a buy signal. I also use this for entries and exits, right? So if my candles are above the 9 EMA, I will hold my position until they start to go below the 9 EMA, which they're starting to here. And I will definitely be out of position if I see something like a cross. Okay, so I'm buying if it's above the 9 EMA, I'm selling if it's below the 9 EMA, and I'm definitely selling if the 9 EMA crosses below the 20. Okay, I am for sure buying if I see a cross of the 9 EMA above the 20. Okay, and if I'm at a support level. All right, if this happened, this cross happened, but then I had another resistance level a couple of cents or dollars later, I may want to wait a little bit to see how we do at that level first, because these supports and resistance lines we still have to pay respect to. Okay, they all work together. All of these lines work together. Okay, so hopefully that makes sense for you. I mean, we could even look at, let's look at United Airlines. Okay, it's kind of flat, but here's our, guess what? Here's our death cross. 9 EMA below the 20. This was on 121 of this year. And from that price point, guess what happened? Boom. Dropped all the way down from the high 90s all the way down to 22, 24 bucks. That's crazy, right? So again, if you're a long-term hold, somebody that wants to buy long-term and sell long-term, use these indicators because they'll help you to determine to get into a position or out of a position. Okay, so when you have the cross of the 9 below the 20, get out. If you have a cross of the 9 above the 20, you may want to start to consider to buy. Cool? Cool. And we use that also on the 5-minute time frame. Okay, so here's an example, right? So you can look at this from a 5-minute perspective, and you could day trade this, right? So here we have a 9 EMA cross above the 20. This is at 23 bucks, and it goes from 23 to a high of about $30 within the day. That's a nice little profit. Okay, you would enter here. You would be cautious as you hit this resistance level, maybe sell a little bit, and then ride the rest of it. And we're staying in this position because why? We are above the 9 EMA. So we're going to wait until we start to show we're going to go below it or we get the cross, right? So here we finally go below. So this is where we start to sell. And then this right here is when we're definitely getting out. But our entry was right over here. So we still made profit here and we made profit finally out here. Okay. So that whole concept works on a year time frame, whether you're a long-term investor and as a day trader, when you're looking for entries in terms of entry and exits. Okay. So that's how, those are the main important EMAs. But then going back to the PowerPoint, there's other ones to look at. So like if you look at the 9 EMA on the year chart, that's telling you the short-term trend, which is accurate. The 20 EMA is our support, right? So if we're now, our short-term trend is below support, there's nothing holding us up. We're going to start to drop, right? So there's some useful tools here for you. And then these are the different types of data that those EMAs provide. So a 9 EMA short-term trend, 20 EMA is going to be your pullback level, so a potential support. So sometimes when you sell off, like here, this 20 EMA can hold that support for you and allow you to go back up. That's why when you have a drop down below, you no longer have, and now you'll start to continue to drop, right? So that's how you use both in conjunction with each other, right? So those are EMAs. The next is the MACD. All right, it's the same type of concept as the EMAs, as the supports and resistance. It's an indicator to help us to determine whether or not to buy or sell. Okay, so when we have a cross on our indicator below our trend line, it's an indication to sell. When we have a cross that goes above that trend line, that's an indication to buy. Okay, and we can see that with this chart here. Here's our bearish cross. It starts to go down. Here's our bullish cross, and it starts to go back up. Here is our sell signal. It starts to go back down. Here's our big bull signal, and we go back up. And then finally, here's the death cross, and then we continue to drop. Okay, so looking at it over here, if I was to put that into our studies, edit studies, MACD, and add that, we can start to see that. Okay, so let's use our oval. Here's our sell signal, which also lines up directly when we start to drop below the 9 EMA. So I have two indicators, indicator 1, indicator 2, telling me I should start to sell. Okay, way before we get the cross. So this is telling me early, hey, you may want to start to sell. Here we have the blue line crossing above the white, so this is our bull signal. And then we have the 9 EMA cross above the 20, another bull signal. Bull signals are essentially telling us to go long, right? So I'm going to go ahead and take a position here because I have two indicators telling me to go ahead and buy. And at that point, I stay in the trade as long as I stay above my trend line and I ride the wave up. Okay, we can look at other examples here. Okay, here's a bull signal. Here we don't quite have the cross, but we do start to go above the 9 EMA, which is my indicator to get in on a trade. And we go from here, from 21 up to this high of 24. That's a nice little profit. Here is the cross to start to sell. Here we start to break down below the 9 EMA. I'm going to get out of my trade. I got in at 21. I got out at 22.91. That's a nice little chunk of change. Okay. But you can see that for everything, right? So if I look at a year chart with this, we'll see that. Here's our sell signal on the MACD. Here we go over here with the death cross, which is also again right here. Time to get out. If we go back to something like Facebook, we may see some better buy signals. So here we go, cross on the MACD, buy signal, cross of the 9 EMA above the 20, buy signal. We stay in the trade as long as we're above the 9. And if the 20 is relatively close, we'll ride this out. Here's a little sell signal right here where we started to drop right here on this 20 EMA. Take some profit, right? Here we got in at 181. We sold at about almost 200. Nice little chunk of change, right? We could look at another one like maybe OLED, another example, right? Here we have the cross on the 9 EMA on the MACD. Here's a cross of the 9 EMA above the 20. We're at a support level, which is another check for us. And we ride the wave from 159 all the way up to a high of 216. Okay, then we have our sell signal right here. Here's another sell signal right here. This is telling me to get out of the trade, and it goes from 211 all the way down to 114. Mega drop. Okay, so these are indicators to help us to buy and sell. So what I would like ideally when I am buying is that we have a cross on the MACD, we have a cross on our EMAs, we are at a support level, which is what we drew manually, and I would feel confident. I have 3 check marks telling me this is a trade I want to take, right? And I am for sure selling on the reverse, right? I have a cross below. This is a sell signal number 1. I'm close to a resistance level. That's warning number 2. And then I have a cross on the MACD. That's warning number 3, okay? Those are sell signals. So it's very important. You see how they all start to kind of work together here now, right? And this is important for both short-term and long-term trading. The other thing is RSI. So RSI is another kind of indicator that we use to see trade. Now going back, let me just go back to the PowerPoint. When we are in the upper edges here on RSI, that is telling us we are highly overbought. And as a result, we may start to have a correction and sell off. And when we're at the bottom, that means we're highly oversold, and we may have a correction and start to get bought back up and move back up. So these are also helping us for buy and sell signals. So if I was to put in RSI over here and apply it, we can see these work together. Here, I have warning sign number 1. I'm at a resistance level that I drew earlier. Warning sign number 2, I have the 9 EMA crossing below the 20. That's a sell signal. Warning sign number 3, I have the MACD, I have the cross at the top of the asymptote telling me this is a sell signal. Warning number 4, I'm at the top of the RSI. This may start to drop. There's 4 warning signs right there, indicators helping you to determine to get rid of your shares, okay? So when you're looking at this this is a year time frame, when you're looking at this and see this, it may be an indication that you're gonna wanna definitely start to sell. On the opposite side, here's 4 confirming signals to buy. I'm at the low end of the RSI. I have the cross on the MACD to signal a buy signal. I have the 9 EMA cross above the 20, another buy signal, and I'm at a support level, another signal that I want to be confident buying. These give me confidence that I want to buy, and from there we rode the wave all the way up until we started to hit this warning area, and then this area here. Make sense? So it's all piecing them all together. The next thing is VWAP. Okay, and we're almost there, and then we'll take a little pause actually once we get to level 2, and I can ask questions related to charting and stuff like that, and then we'll get into the last piece of the presentation, and at the very end we'll have it all open for Q&A. But real quick, since we are paused, by a show of hands, how many of you are liking the presentation so far? Hell yeah, awesome. I'm glad you guys are enjoying it. I hope it's really thorough and helps you out, okay? All right, so going to VWAP. VWAP I do not use on the daily time frame. I only use it when I look at the 5-minute time frame. And so if I was to draw in VWAP, we're gonna go in here and edit studies. And as I'm doing this, I'm not explaining how I'm adding it. I would just expect you to kind of watch the video and see what keys I'm pressing to add all these things in here. But I also gave you my chart, so you're not gonna have to do all of this, but this is just a nice way for you to learn how to do it So if you ever change your mind and you want to add things in or whatever. Okay, so I don't need the midline, or I don't need, I do need this. I don't need the upper band, and I don't need the lower band. Those don't really help me here. All I care about is VWAP. I only care about the midline. I'm gonna change this color to orange, and I'm gonna make it dotted so we know that it's VWAP, and I'm gonna hit OK. I'm gonna hit apply, and then I'm gonna enter it. So then going back to the PowerPoint, VWAP, if we're below that line, it's essentially a bearish trend. If we're above that line, it's a bullish trend. So in other words, if we're below the line, it's a resistance level. If we're above the line, it's a support level. Okay, it helps us out. So here we're below the trend, we're below VWAP, and guess what? The overall pattern is bearish. Here we start to go above VWAP, and the overall pattern is bullish. That's it. That's all you need to know, and that helps you. Okay. So then when you're looking to go long, right? Again, here's the cross on the MACD. Here's a cross of the 9 EMA above the 20. This may be a support. This is a support level here because we could see that, right? If I was to draw in a support level here, right? Because it hits 1, 2, 3, 4, 5 times, doesn't drop. Here it hits again, doesn't drop. Here it hits again, doesn't drop. So that is definitely a support level. Here is a definite resistance level, right? So if I'm looking at this, I'm coming in, right? I see I'm at a support level. I have a cross of the 9 EMA above the 20. I have a cross on the MACD. I have a relatively low RSI, and I have a cross on the VWAP. I'm coming close to a resistance level at 109. So at this time, I may not want to buy yet until I break above. So maybe 109 and 5 cents. And at that point, I'll go ahead and take my position here. So it'll be like right there, what is where I would enter. And then I would ride the wave as long as I'm above the 9 EMA. That's how that will work. Okay. But you're seeing now how everything's just tying in. Everything just comes together. Right? Okay, so that's VWAP. The next is Bollinger Bands. Okay. So with Bollinger Bands, if you remember like your basic math in your standard deviation curve, within that parabola, right, of your standard deviation curve, 95% of the data falls within there. Anything that's plus or minus 5% is considered an outlier. It's the same thing in regard to the Bollinger Band. 95% of the price action typically is going to fall within the Bollinger Band. Anything that falls outside of the Bollinger Band may be an outlier, and as a result may correct. So like an example here you see this candle above that Bollinger Band limit, and as a result it started to sell off. And on the flip side, you had this candle below the Bollinger Band limit, and as a result started to get bought back up. Okay, so it's just kind of like a nice guidance to see whether or not you're too far extended or whether or not you're selling too much, and then you may start to look for a reversal. Okay, but all of these indicators have lag because it takes calculation to do it, and there's lag with that. So these are not always going to be finite. Sometimes you may see moves where the candle stays above the Bollinger Band and it continues to move up, and then it'll take into account and calculate all that difference, and then you may see that you're within. So there's a little bit of lag with it, but it's a nice guide. Okay, the next is volume. Now volume is extremely important. Actually, let me show you how to add Bollinger Bands for those that are interested in adding it. So the same way, I'm going to right click, I'm going to hit studies, I'm going to go to edit studies, I'm going to type in Bollinger Band. Okay, I'm going to add those in. I'm going to hit this little gear to edit. I don't need the midline because our midline, we essentially have a 9 EMA and we have our midline VWAP. So I don't need a midline, but I do need an upper limit and bottom limit. So I'm going to make this dotted and make it purple, and keep this dotted, and I'll make this purple so we know where we're at. And I'm going to hit this, hit apply, and hit OK. And now you'll see our midline VWAP, or excuse me, our Bollinger Band. So now, as you can see, the price action falls within the Bollinger. When we start to go above the Bollinger, like we are here, it starts to kind of correct and come back. Okay, so that's all you need to know with it. Just another nice, useful tool. Okay, and these are all the indicators that you're going to need. Other people use other things like Fibonacci retracement and other fancy stuff. This is all you essentially need. And I've made it extremely way more simpler than that by when you open up my system, there's only a couple of drawings, and then everything else I have color coded. So if we're above our midline VWAP, it'll be green. If we're below it, it'll be red. If we're above our 9 EMA, but I have them drawn in here, it'll be green or red. So if we're below, it'll be red. If we're above, it'll be green. And then I have the other indicators drawn in here. Here's the Bollinger Band. So I don't really care about the lower limit. If this turns red, this means I'm at the upper limit of the Bollinger, so it may start to correct. And then instead of having an RSI down here, I have it here. So I only care about the top. I don't really care about the bottom part. So if I'm getting too overbought, this will then turn red. And then at that case, I may start to sell a little bit and take some profit because there may be a correction and we may start to go back down. Okay, so it's all kind of color coded for you and a lot more cleaner in my opinion. Cool. All right, so then volume, how volume takes into effect is when we get close to resistance levels, what you would want to see is an increase in volume. Okay, that's going to tell you that there's a lot of sentiment and there's people wanting to buy as well, and that can drive the price up. When you start to see a decrease in volume as you get close to a resistance level like we are here, then we are going to fail to break that resistance. And that's showing you that buyers are losing, that there's less interest in trying to break that level. And as a result, you may start to see a huge increase in volume of sellers. Okay. So that is how you would use volume. Now on the flip side, what you would want to see when you do get close to this level is a huge increase. And once you break out of that level, continuation and increase in volume to go into the higher levels. Okay. So let's see if we can see some examples here. Let's look at UYTU maybe. Okay, let's look at over here. Right, so this one isn't that good. Let's look at BLPH, which was our crazy winner the other day. Okay, so as it's breaking all of these levels here, which were previous resistance in the past, you see this increase in volume. Once you start to get close to these resistance levels, you're starting to see a decrease in volume, which is dictated by the blue in the background, but then also here. You're seeing a decrease in volume, which is showing a low interest. The midline is your average volume of what's going on. We're definitely below average at this point, and we have a huge sell-off. Okay, then later on, we start to break through those levels, and we see an increase in volume. We see more buyers than sellers for these levels here, and we have this big spike. And then we start to kind of plateau a little bit, and then here, we have a big sell-off, and then again, super low interest, and then drop back down. Okay, so that's how you use volume to your favor. Then I also added some custom code for you with this here. This is a buyers versus sellers volume. So the green, you obviously want to see more green because that shows buyers. The red shows more sellers. Okay, so that's how volume works. The next is level 2. Okay, so level 2, what this is showing me is the market price of a stock, which is right here, $29.53. And then it's showing me the best bid and what someone is willing to buy the stock for, which is $29.33. And then the best offer someone is willing to sell the price for, which is the ask, which is $29.36. And then the difference between the bid versus the ask is called the spread. So we have a 0.03 difference. We can see the volume, which are how many shares currently being traded. And then we have the high, which is the current high price that the stock has went throughout the day, currently on the day. The low price, which is the low price of what the stock went. And then the closing price, which is where, if you're looking at a certain time frame that candle closed at, or if you're looking at it from like a year perspective, what previous day's close was, or what today's close ends up being. Now what you see here is what we call level 2. So this is level 1, and then here is level 2. So level 2 is a little bit more depth of what's going on. So what this is showing me is that I have a huge resistance at 29.36. Why do I say that? I'll let you look at it for a second and map it out. But what you see here is all of these different people and different market makers wanting to sell shares, which these are the share sizes, at 29.36. And on level 2, you're actually adding another 0 at the end. So this is not 1,000 shares. This is 10,000. It's 10,000, 10,000, 19,000, 2,000, 1,000, 1,000. Okay. This is a huge order of sellers. So when you're looking at this on a chart, if I saw something, and we'll just use this as an example, and say all the stars aligned and I wanted to get in on a stock. I had the 9 EMA cross above the 20. I had a cross on the MACD. I'm at a support level here at 1711 or 1712, and I have a low RSI. Those are all indicators that I want to buy, right, at 1712. However, if I notice at 1713 that there's 50,000 shares being sold, I'm definitely not going to get in. Definitely not going to get in, because what needs to happen is those shares need to get bought up, or those sellers need to move out of the way in order for us to continue on. All right. So then you'll have this constant tug of war and battle between buyers and sellers. And ultimately who wins is essentially who gives up first, right? So if I'm looking to get in at 1712, what I want to see is also buyers coming in, other buyers coming in and putting orders at 1712. So instead of seeing 50,000 over here on the sell side at 1713, I want to see 50,000 over here. Then I want to see 30,000 shares being bought here, and then so on and so forth, right? So I want to see the buyers out competing the sellers, which will give me an indication we may start to move up. All right. When you have this level here, this level 2, and what goes on here, this is what we call real-time support and real-time resistance. No matter what shows here, what happens here outweighs all of this. Okay, because we can have an instance like this where we have a huge resistance at 29.36. These people need to move out of the way. Their shares need to get bought up in order for us to continue to move forward. Okay. Now what will happen is if we don't break this 29.36, it can cause a downstream effect where, example here, we couldn't at one point break this 22.97. And as a result, other people were noticing that, hey, there's really big sellers at 22.97. Then you start to panic and get scared, right? And you're like, you know what? There's a lot of I see all these buyers trying to buy at a price of 22.97, but nothing's moving. We're not breaking it. This is definitely a resistance level. And as a result, people are like, you know what? I think we've reached our peak. I'm going to take my profit. And then more people will start to take profit. And then it just causes a trend. And then you start to see a huge sell-off. Okay. On the flip side, if you start to notice you're breaking above that trend and seeing more buyers coming in, it'll cause a huge trend and spike to start to move up, right? So they both work the same, and that's why we pay attention to here. So then when I'm looking at this, where do I see support? What's the price where I definitely see a lot of support? If this here is a lot of resistance, this over here is a lot of support. This is showing me I have a lot of buyers willing to buy at 29.30. So if I was to take a trade and say I bought my shares at 29.31, I would be sitting a little bit worried and the fact that we haven't broke 29.36 yet, but I would be comfortable knowing that I'm still protected because these 29.30s over here are holding me up. They're giving me support. If these people start to move out of the way, then we're going to start to drop. All right. So like we see over here. Over here, we're holding support. These people here that were at 17, we're like, you know what? We're not going to let it drop below 17. I have a lot of shares at 17 bucks. We're not letting it drop below. Over time, they got scared and decided to sell. And then once that support broke, then we started to break. Okay. So they all work together, their support and resistance. All right. So that is all the indicators and all the trends that we use. So to give a quick little overview, and then we're going to get into how to place orders and some advanced things and things like that. But we have our support and resistance that we first draw on the daily chart, okay, because we want to get a historical representation of that support and resistance. Then we go to the 5-minute chart and draw that support and resistance. And we do that by clicking on this little trend line here and just double clicking, and it'll draw in a line, okay? That's how we do that. The other thing is we look at our EMAs, right? So if we have a cross of the 9 above the 20, that's a buy signal. If we have a cross of the 9 below the 20, that's a sell signal. I'm not getting in on a trade at any time if the candle is not above the 9 EMA at a minimum, okay? So those are rules. And I want to make sure I'm at a support level. If I'm at a resistance level, I don't want to get in yet, right? Because if I hit resistance, I may start to drop, okay? So those are two things working together. The other is the MACD, right? So if I have a cross on the MACD, that's a buy signal. If I have a cross at the top of the MACD now below our level, that's a sell signal, right? And then we have our RSI. So if we have a high RSI, which will in here color red, that's a sell signal. If it's not, it's okay for us to take a trade. Or we have our Bollinger Bands to help us to determine if we're too far extended and we may start to correct. And then we have our VWAP. If we're below VWAP, then we're in a bear trend. If we're above VWAP, then we're in a bull trend. Okay. And these same things in terms of the EMAs and then the trend lines and then volume. So if we see a decrease in volume, when we're at a resistance level, we may start to sell off. If we see an increase, we may start to break out. If we see huge resistance here on the level 2, those people need to move out of the way in order for us to continue up. If I'm at 1717, I want to see somebody holding support here at 1715. Okay, so all of those things matter. Now, when you're looking at the long-term buys and holds, it's the same thing. So people are asking me, you know, should I buy Tesla yet? Should I buy Google yet? Should I buy Amazon yet? All this stuff, right? So if I'm looking at Tesla on the year chart, I want you to tell me, am I going to buy or am I going to wait? I hope your answer was wait, right? Why? We have our death cross here. We have not had a cross yet of the 9 EMA above the 20 to indicate a buy signal. We still have a downtrending MACD. And if we look at volume, we have an increase in volume, but all of it is essentially red. Okay, we only had one day so far that was green, but overall the pattern is still downtrending. Okay, so what we would wait for is what? Confirmation. Wait for us to start to go horizontal. Wait for us to start to move up. Wait for a candle to go above the 9 EMA, and then maybe at that point consider taking a trade. And if you take it here, which is at 500, note that you're going to have resistance based off of historical trend, but then you're also going to have resistance off of the 20 EMA because you're below it. Okay, so I always like to wait for all the stars to kind of align a little bit before I decide to take those type of long-term trades. Okay, so I hope that helps there. So that's how all of that works. Now, when you're long-term trading, you don't care about what happens throughout the day. You are monitoring it, but as long as you're above this 9 EMA, you're going to stay in on the trade. Same thing with the day trades. As long as you're above that 9 EMA, you're going to stay in on the trade. Cool? Cool. All right. So with that, I'll open it up to some questions for right now, and then we'll get into the other piece of this, which is going to be risk management and how to place our orders. All right. So if you have a question at this time, I would ask you to raise your hand, and then I'll go in order. I'll try to go in order of and answer your questions. Okay. So first, let me probably turn on the volume so I can hear you when you are speaking, and then we could go from there. So I have first Anthony. So what's up, Anthony? This is Anthony. Let's see. You just got to unmute yourself. Can't hear you, bud. All right. Well, while Anthony's working out his mic, we'll go off to somebody else. So we got Jay Kiniar. Hope I pronounced that right. Or so Jay.
What's up, dude? Can you hear me?
Yep, I can hear you. How's it going, man?
Not much. I was raising my hand to say I was liking the webinar, but I do got a question about adding the EMA because I have your from the YouTube. I have the template, but I'm sure I can go back in this one and get the 20 EMA to add it, right?
Yeah. So I'm giving everybody this PowerPoint.
All right.
And so for the PowerPoint, you can go over here to how do I set up TOS, and then all you're gonna do is just copy this link. And then I showed you earlier in the video, which will also be in my Discord, on how to then add this and upload it.
All right, cool. Yeah, I'm in the Discord. I'm already in the premium, so I'm gonna.
Oh, nice, dude.
I'm trying to sharpen the knife, brother.
Sharpen the knife, dude. Appreciate it.
Hey, you the man. All right, brother. Thank you.
All right, so let's see. We have Brian Johnson. What's up, Brian?
Hey, how you doing?
Good, man.
Good. I'm actually at the beach right now, sitting in the car, watching. So I'm not actually on my tablet or anything. But I just had I came in late, but I had a question about EMAs because I came in at about that time. So you had mentioned that you want to like you want to so when you notice when you cross above 9, right? That's when you want to start thinking about getting in on a trade, right?
Yeah.
But then you mentioned so what's the opposite of that? What's the cap again on that again?
So if I'm below, I'm not getting in.
Okay, and then but once you hit a level of or actually even if you get past resistance and say you and you're kind of noticing that there's going to be a downturn, say there's some kind of crazy news like what's happening right now, at what level or like what number should you start? Should you like what's the actual like notification, like, hey, all right, that's when I need to go, like what's the number again for that, or was there a number?
There's no number. It's just so the for sure way that I need to start getting rid of my shares is when I start to see if I am in a position, right? So this right here would be a buy signal. This right here is a buy signal because I have a cross on the MACD. I have a cross of the 9 EMA above the 20.
Yeah.
This is all we're moving up. And then as soon as I start to cross below the 9 EMA is when I wanted to start to consider to sell. And then I for sure want to get out if I see the cross of the 9 EMA below the 20.
Okay. And then also, can you so the 20 so because I'm on my iPhone screen right now, but where's the 20 at though? Like where is that at?
So this is the 9 EMA is this blue cyan colored trend line. The 20 EMA is this yellow one. So if you're on the iPhone, it may be kind of hard to see, but I'm gonna upload this to my Discord, which in the beginning of the video I showed everybody how to join, which you can join free. And then within there, I'm going to have all of this content in there.
Okay, cool. But yeah, that clarifies a lot for me. So I appreciate it.
Thanks, Brian. All right, let's see. We got some more questions. Let's see. We have Tyler.
Hey, can you hear me?
Yeah.
What's going on, man?
What's up, man?
So I just had a quick question on that MACD. I didn't hear you go over what it really means. It kind of seems like the 9 and the 20 crossing, but it looks to be a little bit earlier.
Yeah. So
what is that really?
It's like your moving average convergence divergence, which is, if you want to look at it like from a whole thing of what it is. So going back to the PowerPoint, I provided for every single one of these topics, I provided a link to a site. So this is for Mestopedia. So if you want to see like all the math involved, what like the whole in-depth terminology is and how it's used from an advanced perspective, this will be the link to go. and you're going to get the PowerPoint, but for simplistic sake and for our sake, when it comes to day trading and then the long-term stuff, essentially when we see the crosses, so if we, to keep it simple for people, right? If you have a cross at the top of the asymptote, that's a sell signal. If you have a cross at the bottom of the asymptote, that's essentially a buy signal. So then when we're looking at it from like, if we were looking at Tesla, right? Or let's just look at maybe OLED, right? And we look at a year time frame. When we have these crosses on the MACD, right? Like here, this is a buy signal. So this is a change from a bearish momentum to a now a potentially bullish momentum. And then we'll get confirmation on the cross of the 9 EMA. So then this will be indicators to say, hey, we may want to start to buy. And then when you start to get these crosses here, these may be indicating us that, hey, we're definitely wanting to sell. So like we have a cross here on the MACD at the top of our asymptote. We have a cross of the 9 EMA below the 20. These are sell signals. Sometimes you may get the cross on the MACD early. So like if you look at here, it's way before we start to move up and get the cross of the 9 EMA above the 20. But this is where we start to go above the 9. And then from here, we break, and then we go ahead and move forward.
So with all your experience with that, statistically, what are you eliminating the odds to be for risk management?
So if I'm looking at this, what I solely take my trades on are the 9 EMA, as long as we're above the 9 EMA. And if I get that cross on the MACD, it's about almost a 60 to 70% win rate, which if you're looking at a 2-to-1 ratio, 60 to 70% is highly profitable.
Okay, cool. Thank you.
Yeah, good question. All right, we have Rob.
Yes, can you hear me?
Yeah, what's up, man?
Hey, how's it going? I was just wondering, I know sometimes on Thinkorswim, whenever I'm trying to get in on a trade, it seems like I get filled like maybe 30, 40, 50 cents higher than what I'm placing my trade on. And I was wondering, is there some ways you could talk about like how to get more accurate fills or?
Yeah, so then that's the second piece here, which we'll get into the risk management, and then we'll get into the different types of orders.
Oh, yes, sir. Thank you.
Yeah, so that's to come. That's to come. All right. So Nick, what you got, Nick?
Yeah, so thank you so much. I actually have a few questions. Can you hear me?
Yeah.
Yeah. So my first question was, you say when you're at a support, you will hopefully there's like you have that confirmation and you rise from there. So when you're near support, it's a great time to buy. You said when you're almost at a resistance, it's usually not so good to buy because you might hit back down. So like, is there like, how do we know whether or not it'll go past that resistance and kind of form a new resistance?
So we won't know, right? So what we wait for is just like when we wait for stuff to bottom out, we wait for confirmation, right? So if we're bottoming out, we want to wait for it to consolidate, then start to move back up, and then hit our indicators, right? So if we're coming close to resistance, we do not know whether or not it's going to it's going to break. So you take a trade based off of that probability that it could, and you base that probability off of either volume. Maybe you start to see the seller that was there, their shares start to diminish here on the level 2 or time and sales. Mm-hmm. And then if you want to be extremely cautious, what you'll wait first is for a confirming candle to break above that certain level, right? So
okay.
Once it breaks above, though, you don't want to go based off of an open. You would want to go based off of a close. So I'll just draw a line here, for example. And this is just an arbitrary line. This isn't maybe an actual support or resistance, but if I was to draw this line in here, what you would wait first is a first confirming candle, which would be this one that breaks finally above the line. And then you would wait for the sentiment of the second candle. So you would see if it starts to go green and then continuing on, or if it quickly starts to go red. But you want to be patient. Some people wait 2 confirming candles before taking an entry on the third candle open. So it all just kind of depends on you. And so what that will depend on is then being able to have metrics for your trades. So am I better at trading the first candle to break above that break point? Am I better at trading the second candle open? Am I better at waiting for the first two candles that broke above to kind of close and then taking entry on the third candle? All of that you will start to kind of drive into your metrics, and then from there you can take your approach.
Okay, yeah, thank you. And then I actually have another question.
Sure.
So you say like when the 9 EMA crosses above the 20 EMA, that's a buy signal, right?
Mm-hmm.
Right?
Yes.
Oh, okay, perfect. And then so I get, and then for the MACD, which, like, you're comparing the MACD to a trend line? Which one's the trend line? Or is that like already going to be on the platform, or?
Yeah, so the MACD will already be here. So I'm looking for the blue line. If the blue line crosses below the white, that's a sell. If the blue line crosses above the white, that's a buy.
Okay, so the blue is going to be the MACD, and then the white's going to be the trend line.
Well, this is all trend line, but your MACD is going to be your average. It's good. It's a
Okay.
average. Yeah.
That makes sense. Okay. And then my question was, how do you know what's considered a low RSI or a high RSI, or like the low end or the high end?
So going back over here, right? Just because I don't have it on the other chart anymore. The RSI is you'll have an upper limit and then the lower limit. So once you're at the top upper limit, that means you're overbought. When you're at the lower limit, you're oversold. So then if you're oversold, then it may start to move back up. And if you're overbought, that means you're overbought, and then it may start to move down.
Move back down. Okay. So is the RSI more of like a long-term indicator?
Somewhat. I use it mainly on the daily. Some people use it on the 5-day, 5-minute.
Okay.
It works for both.
All right. And then could you really quickly just could you point to the VWAP really quickly?
So the VWAP is not on here. So I have it custom coded for you guys. So instead of having a whole bunch of stuff on your chart, I just have these indicators up here. So here's VWAP. So since it's red, and it's red at a price of 118. So that's where the midline is at. So if I was to draw that in just to show you, studies, edit studies, and I drew in VWAP. And I change this here so then we can see it. I'll leave it purple. I'll take off the upper and then the lower, and then I'll make this dotted. We can see VWAP here. So here's VWAP at 118, which is the same thing I have coded here for you guys. So instead of having all this stuff on your chart, I kept it simple and then just put them at the top. So basically, if you're below VWAP, it's a bearish trend. If you're above VWAP, it's a bullish trend.
Okay, and the VWAP's gonna be that dotted purple line, right?
Yes. Or
And
if you don't have it here, you're just gonna pay attention to this. So if this is red, red means it means stop, right? No go. If it's green, then we may be good to go. Now that doesn't mean that just because we're below VWAP that we can't take trades, but a lot of the times what you like to see is the stars aligned, right? So here,
right.
everything's
No,
aligned,
that makes sense for sure.
and then everything go up. Yeah.
Yeah, for sure, that makes sense. And then the last question I had is just so if you want to get in on a position at a certain price, so you want to check the L2, and you would say you want to see at that given price, you want to see more buyers than sellers.
Yeah, I want to see more buyers or sellers, or at least support where I'm getting in at.
Right? Okay.
So like if I'm getting in here at 106 or 105, I also want to see people holding 104, 103, 105, because that's going to hold as a cushion for me, because those buyers will need to either start to liquidate their shares in order for it to start to drop, right? So since they're there, they're holding that support for me.
Okay, so you want to have that support or more buyers and sellers at lower prices as well.
Right. So like if I'm at 105, I want to see somebody holding at 104. I also want to see more buyers coming in at 105. And then ultimately, I definitely want to see more buyers starting to come in at the higher prices, because then these will need to start to move out of the way before it starts to even get back to my entry.
Okay. Yeah. Thank you so much. That's all I had. Thank you so much, by the way.
All right. So let's see who else we got. We got Matt Roman.
Hey, Andrew. I was on the live chat last night, and it's been great watching you. What I'm wondering about is I trade on a 13-inch laptop, and I only have like one screen. So when you're making your supports and resistance lines, what are the time frames that you're creating those on? Because I'm only ever looking at one chart, which I know like I want to start looking at like more options. But when you're making those supports and resistance, are you on the 5-day, 5-minute? Are you on the 1 year, 1 day, the 180 day?
Both.
What are your like strongest supports and resistances?
So your strongest indications is going to be your year chart, because that's a year's worth of data. The smaller time frame indications are still important because that's what's currently going on. So I'll color them a different color. So if you're just restricted to a 13-inch laptop, what I would do with you, for what you should do is you could always set charts and flexible grid to be something, so you could kind of click in between. Or what you can do is just quickly change the time frame. So here I could go in here and change this to a year chart real quick, draw the supports and resistances pre-market, and those supports and resistance lines that you draw will still show on the 5-day, 5-minute chart. And then if I'm taking my day trade or I'm option trading like you are, whatever the case, then I switch it to my 5-day, 5-minute chart. Okay, but then I'll map out the supports and resistance on the 5-minute. I'll change those a different color to maybe blue. But now I'll have my year trends in here, and then the blue trends will be the 5-day, 5-minute trends. And so I'll be able to see all of that just on the one chart.
Okay, that's awesome.
Does that help?
One more thing. Yeah, no, that makes a lot of sense, and it's good that the lines kind of carry over from chart to chart. That's a really helpful feature. Say that you're taking an entry at like a pre-market high. What's the minimum like gap that you'll take to another resistance? So say like there's a really good pre-market high that you have a great entry point. What's like the closest you'll take to another resistance? Is it like 10% basically?
Yeah. So like if this is the pre-market high, right, over here, and let's just remove this line. I just drew this one in arbitrary, right? This is where I was saying I was take my entry at. So let's remove that. So let's just say from the next resistance point, it's 5%. I'll take that trade because at a minimum, I may make that 5%. If it's less than 5%, it's not really worth it for me. Is that where you're getting at?
Yeah, that's awesome. Thank you so much. Shout out to my friend Jesse who just joined your group. Thanks, Wolf. See ya.
Thanks, man. All right. So with that, we still got some more questions. We'll save the rest for the end. So just jot them down. Let's finish up here, and then we'll close it out. All right. And then I'll have all these questions for you guys that you can ask. So with all of this stuff going on here on the chart, the most important topic of all of it is managing risk. Okay, so I helped you guys. So if you were to go to my Discord, I have this thing in here called, it's in the useful file section. It's our risk versus reward type of thing. So what this is based off of, why can't I see it that good? Oof. Let me see, control minus maybe. Okay. All right, there we go. Now I could zoom in. All right, so this Excel sheet, what I did was based off of your account, and these are just rules of thumbs from different types of books and things like that, where the rule of thumb for a lot of traders is you should never risk more than 1 to 3% of your total equity in your account. Okay, so that means if I had a $20,000 account per trade, I should never lose more, if I'm just on the 1%, more than 200. Okay, in a max, I should never lose more than, oops, Control Z. I don't know why that's not showing. Oh, I know why, because more than 600, right? So I like to keep it at 1% to give myself some room to take some losses. Okay. Now, and then as a result, what I do then is to say, okay, well, if I'm taking a trade and I'm looking at my statistics, what's the average that we're kind of making on a day-to-day basis? What's like the common theme that we see? And the common theme that we see is maybe like 5 to 10% moves. Those are very reasonable moves to make. I mean, BPTH was a 500% move that we capitalized on, for Christ's sakes. If you look at the daily recap within our Discord, you'll see that we've made, and let me just open that up so that you can see that. Discord. And I go to the daily recap, and I go over here, and I go to daily recap. You'll see this is what happens at the end of each day. I put kind of like this recap. So here's an example. I send an alert out to the team saying, watch BMRA if it breaks 6.5. It breaks 6.5. We go above VWAP. We have our crosses on our MACD, our RSI, all that good stuff. And then we end up going from 6.5 all the way to a high of 14.99. Okay, huge move. That's 130.6% if you held it that entire time. Obviously, you would have sold over here at 8 and then maybe got back in as we broke 10. We would have sold here at 8 because we broke below the 9 EMA and 20. So, and then we had the cross on the MACD, and then later we had the cross on the MACD for a bull signal, and at this point we would have taken another entry, right? But overall, these are huge gains, right? So then we could look at another example. Here's one that made 199%. Here we have our cross on the MACD. We have the cross on the EMAs. This one I put pre-market to the members saying, look at this at $1. It broke that $1 and went all the way to $2.99. Okay. And then you could just go through here and you can see we find stocks that make 50%, 26%, 18%, 110%, et cetera, right? So at a minimum, we could definitely find 5% gains, right? So then I would do in my head, okay, well, if I'm looking at, to say 10% gain, if I hit and I get stopped out, because the next rule of thumb is that you should always have a 2-to-1 ratio at a minimum. Now, what a 2-to-1 ratio is this little green sweet spot over here. This means in terms of accuracy, I only need to be accurate 33% of the time using a 2-to-1 ratio to break even. If I'm consistent, anything more than 33% is going to be profitable. So with that said, if I'm using a 2-to-1 ratio and I'm saying 10% is my target to make profit, then that means negative 5% needs to be my stop, right? 2-to-1, right? I hope you guys know some basic math because that ratio, I drew them over here, right? So 2-to-1, 10% profit target, 5% stop loss. 3-to-1 is a 15% profit target with a 5% stop loss. Now, these numbers of 10 to 5, they don't need to be 10 to 5. It could be 14 to 7, in which this will be 21 to 7, right? And then so forth, right? This could be 20% to 10%, right? And then this will be 30% to 10%. But understanding, if you're shooting for 30% goals as your main goal, you're not going to hit that, right? So I like keeping that 10% as kind of like that sweet spot and the negative 5% as that sweet spot for a stop. So then I do the math of, okay, well, if I have a $20,000 account and see I get stopped out at negative 5%, where am I need to do the math to say, okay, if I lose that amount, it is either at my 0.1%, anywhere between my 0.1 to 0.3% or less, right? So with the $20,000 account, to be safe, you could put in 10% of that account per trade, so $2,000 per trade. And if you got stopped out at 5% of 2,000, you would lose 100. Well, that 100 is less than the 1% risk you're allowed to take per trade. This is even far less than the 3% max you're able to take and lose. Okay? And if I make money, I make $200. All right? So it's having a risk-based statistical approach to take trades. Now, what's extremely important here, what is so extremely important is that this has to be consistent every single time before you start to scale. So you need to show that you can take trades using the 2,000 before you decide to up this. And so the way that it kind of works, and the idea, right, is that if I have a $20,000 account and I have 2,000, and say in 1 week I make $200 for every trade, and I only take one trade each day, so then that's $1,000, right? Well, now the following week I'm no longer trading with 20,000 in my account. I'm trading with 21,000, and as a result, my target now is going to be $210 that I'm making. Okay, and then so forth, right? So, oops, I forgot a zero there, right? So, and then if I lose, I will be losing 105. And then things just start to compound over time, right? So that's how this risk management and Excel calculator works. So to use this simple math, if I had a $100,000 account, that means I could use 1,000. I could lose 1,000 per trade and I will still be okay. My account will still have 99,000. That's not going to hurt me, right? So then if I'm only putting 10% of that account, which is 10,000, and my goal is to make 10%, which 10% of 10,000, I will walk out with $1,000 in profit. If I lose on that trade, I'll lose 500. But this $500 loss is far much more less than that 1% I'm even allowed to lose, right? By rule of thumb. So if we look at basic probability and we stay consistent, if I took 10 trades with this ratio here, and 4 of them I won, that's 1,000, 2,000, 3,000 plus $4,000. And on the other 6, I lost and got stopped out at my stop of 500. That's a loss of 500, 500, 500 times 6. That's negative 3,000. 4,000 minus 3,000. Guess what, guys? I'm still profitable. Why? Because the 4 out of 10 is 40%. And I'm using a 2-to-1 ratio, which shows me that I only need to be accurate 33 to be at 0. So since we're at 40, guess what? We're profitable. We have made money. Now, when you start to get cocky and you start to change this, and say on one trade, you know, I think that the stock has really good news and I'm going to break away from my rules. And instead of putting 10%, I'm going to put 40%. I feel really confident and I'm going to put $40,000 in on this trade because I feel that confident about it. And I'm wrong. And I get stopped out, and I get stopped out at 2,000. Well, if I change one of these negative 500s now to negative 2,000, guess what? I'm no longer, the ratio is still the same. It's still 4 to 10, but because I got ballsy on one trade and lost 2,000, I'm now down negative on the day. So you need to have a consistent way of doing it, and these need to stay consistent. Okay, so then the way that stays consistent is based off of the share price. You determine how many shares you can buy to equal close to this amount. So if if the shares is $25 per share, then I could buy 400 to get equal to that 2,000. If the price of the stock was $5 per share, I could buy 2,000 shares to get equal to that 10,000. Okay, and then so forth, right? If this was a Control Z, if this was a exit, if this was a $100 stock, right? I could buy 100 shares. Okay, and that means if it was a $100 stock, in order for me to hit 10%, that would need to go to 110. For me to get stopped out, that stock needs to go to 95. Now here's where the cool stuff happens. I have it set up on Thinkorswim so that you don't have to worry. The only thing you need to worry about to calculate on this Thinkorswim or on this Excel is your total account size. So most people will have the 25,000. Oops, Control Z. Some people will have the $25,000 in their account to trade, right? So 25,000, right? And so with that, my profit target should be 250, and per each trade, 2,500, right? So then that's all you need to worry about is how much you need to equal to, right? So then I would come over here and guess what? Look what I have. If I have to spend, if my max to spend is 10,000 per trade, that means I could buy 88 shares at the current market price, right? Roughly, to get close to that $10,000, right? The price is 113, or let's just say 114. If I do 114 times 88, that's $10,032. That's almost exactly spot on to what I can afford per trade. Now here's where the other cool magic comes in. On this Thinkorswim, there's this little thing here. Normally it'll show single. If I hit this little TRG with bracket, it'll show this percent, and I can change this to be a plus 10% and a minus 5%. And guess what? My ratio is automatically in here. I'll save this and I'll call this my 2-to-1 ratio with a 5% stop. So let's just look at a dollar stock. So then we could quickly see those stop orders coming in. So if this was, and let me put my 2-to-1 ratio. So if this was $1.44, if you look on the chart, you'll see at 158, that is my 10% goal. At 136, that is my negative 5% stop. To do the math on that, to make sure that's right, you do 144 times 1.1, that's 1.58. It's accurate, right? And so as soon as I hit this button, it's automatically gonna do all the thinking for me. And so that's how you take the thinking out of the trading, take the psychology out, and then just let the system do its job. All right. And then going back to the risk thing, like somebody was asking earlier, right? So here I have a lot of support here, right? On 148, 147, 146. Look at all these sellers here at 150, 151, right? I do not want to buy yet until I break above. And then once I do, I'll put my order in, and then those brackets will come into play, and then I could take my trade. So to show you what that looks like, and this is a really cool tool that I highly recommend that you use. It's called an on-demand feature. Now, what the on-demand feature, it allows you to go back in time and practice. And so yesterday when we did the webinar, that's what we were doing to kind of show you how to place those orders and to show you that it works. So when I come in here, and it takes a little bit of time to load because it has to backdate and it has to pull all that data. So let's just give it a second for it to kind of load here. All right, so if I don't have this checked, it's going to ask me to confirm my order here. Now, as a day trader, you don't want to do that. As an investor and a long-term person that's going to hold for a while, you may want to consider it and just make sure you're spending an amount you're comfortable with, right? But as a day trader, I want this to get filled right away. So the current price is 143, right? So if I hit this and I have 100 in here, so that means I'm going to buy 100 shares at 143, right? So if I wanted to do the math, right, this means I could buy 7,000 shares to equal my 10,000, right? So if I change this to 7,000, right, and then I come in here and do 143, and I hit this button, it's going to get filled. And then as a result, it's going to put my stop order right there. And if I back out, I wonder how much far I have to back out, maybe like a couple of days so you could see it. It'll have my profit target right here, right? So it has my stop order, and then it has my profit target. And then if it hits this, it'll fill. If it goes down and away from me, then I will get filled and get stopped out. I will lose my 500. If it hits my 10%, I'll make my 1,000. Now the question becomes, how do I manage this? How do I make sure that if it's going up, I may not want to just get only 10%. I may want to maximize, like for BLPH, for example, that made 500%, or other stocks that have made, how I went back to the Discord that 46% or 28%, or going over here back to where we were at looking at these that made 165%, right? Here was entry. Here we have our cross, high volume, shoots all the way up from a low of 250 all the way up to 585, 165%. Ended up being another $4,000 profit day. And here was an early alert. So I sent this pre-market watch list telling the team to look at this stock at $2.20 if it broke there. Once it broke that price, we took our trade. We rode the wave up. Once we got the cross, we sold. Once we got the cross again, took our position again, and then rode the second wave. So that's how that works, right? So when you're doing this and going over here, you're just coming in here, taking that And so when you're asking, how do I make sure I maximize, what you can do, and what my rule of these are rule sets now. So if the price starts to move up and it approaches my 5% target, I'm going to do one of two things. First, I'm going to analyze to make sure to see if the sentiment is still bullish, where we may reach that 10, or if volume is starting to decrease, where, hey, maybe this may be the cap. And at that point, I'll just take my profit. If it's the first scenario, though, and it still shows we may have some room, what I'll do is adjust my stop to, instead of being -5, to now being my entry. And then this way, once it's at my entry, no matter what happens, if it breaks away from 5 and drops back down, I'm not losing anything because I'm back to square zero. I'm back to my entry point. And the second thing I'll do is adjust my profit target. Instead of being at my 2R, which 2R, what I'm referring to is this, right? This is 2R, which is 10%. 3R is 15%. So what I will do is adjust this, instead of being 10%, and move it up to my 15 or my 20. Sometimes I'll just take it off and then just kind of see what goes on. And then when I'm comfortable, flatten my position, right? But then that's a rule of thumb, right? And then once it goes above 10%, I'll adjust this to be at the 5% stop. So no matter what happens on the day, I'm still walking out with 5% profit, which is really good, right? So that's how you use the risk management, Excel, and combine that with the Thinkorswim and take a strategic approach to your day trading. Okay, when it comes to the long-term swing trading and then the long-term holds, you don't need to do all this. The only thing you need to make sure is that you're monitoring it maybe on a daily or weekly basis to make sure you're not below the 9 EMA, right? And as long as you're above the 9 EMA, you're holding. Because if you look at stuff like, OLED or something like that, there's going to be, if you look at the year chart, there's going to be all this variability that happens on a daily basis, but you don't really care, because as long as you're above the 9 EMA and you still have a bullish trend on your MACD, you're still going to be bullish, right? So that's the idea and process there with that. All right. So that's risk management from a day trading perspective and how we use all that. So now we've gone through literally everything in terms of A through Z. So to give you my cheat sheet, and if you want it on paper, I could put it on paper, but to give you my cheat sheet and my breakdown, what I do every single day, and this is exactly what I do to the T. So here's your bread and butter, okay? I have this watch list set up, and I'll show you how to set this up. So you go to scan, okay? And this is the settings for my pre-market scanner. So you can copy this. So you'll go to scan, and then you'll go to this little, where did that thing go? I think it's like, maybe I gotta move it down. Oh, right here, add filter. So I can add a stock filter or a steady filter. So you'll hit this little add filter here, and you'll add 2 stock filters and then 1 steady filter. And the steady filter that we have is price change, close, and then 1.5% greater than 15 bars ago on a 30-minute time frame. Now, and then for stock price, we're looking at stocks at a minimum of 85 cents. I don't trade stocks less than $1, but sometimes those 85-cent stocks can move up to $1 and then really start to make really big moves. And we like dollar stocks because they only need to move 10 cents for us to make our 10% goal, right? A $2 stock needs to go to $2.20 for us to make our 10% goal. A $5 stock needs to go to $5.50 to make our 10% goal, right? So you start to see the incremental difference as the prices get higher, right? A $100 stock needs to move a whole 10 points before we make 10%, right? It needs to move 10 whole dollars before we make that 10%, right? So that's why we kind of, if you're looking for growth, you're looking at stocks between $1 to maybe 25. And then if you're looking for maybe like the longer term holds, you're looking at the $25 stocks and up. And then if you're looking at for the year and generational wealth, you're looking, higher than that, right? For volume, we have volume of 85,000. Now, the reason we have 85,000 for volume is we want liquidity, right? We want to be able to get in and out of the trade. So if there's 100,000 shares being traded, that's very easy for us that only maybe have a couple hundred shares or 1,000 shares to get in and out of the trade. If this was less than that, it would be very hard for us to liquidate and get in and out of our positions easily. Now, the bread and butter is the study. The study is telling me that the closing price has moved up 1.5% greater than 15 bars ago on a 30-minute time frame. So this is looking at 15 bars worth at 30 minutes. So it's essentially 30 times 15 worth of data points for those bars. And then we're looking for a stock that has moved at least 1.5% greater. Now, this is a pre-market scanner, so this isn't going to work right now because the market's closed. But how I would use this is once I do that, and I'll look for 1,000 stocks, right? And then I'll hit scan. And then once I hit scan, it'll then put in all of these different stocks that fit that criteria, okay? So I don't look at this window. I'll go back to charts. And what I do is on this left toolbar, on this column over here, you could hit this button, and I can hit this plus sign and add a watch list. So if I hit this plus sign, I can hit watch list and it'll open up a watch list for me. Okay. And when you open up the watch list, it may have a different name. It may be like a default. So you could just click on it. And once you click on it, you can select the one that you saved by going to personal and then finding your watch list that you just saved. Okay. So in this case, you'll call it pre-market. And then the cool thing here is that you can have all of these set to number 1. So it's almost like a walkie-talkie, right? We're on the same channel and frequency. So then I change my watch list to number 1. And then what I do pre-market is I filter by market percent change. Now, the reason I do this of market percent change is because it'll take the difference of last night's closing price to what is currently going on pre-market. So as a rule of thumb, I like to look for stocks that, here's a rule now. So write this down. I like to look for stocks that have gapped up a minimum of 5%, okay? That's showing me, hey, we're already moving up 5% pre-market when ideally there's not really a whole lot of traders pre-market. And as a result, it may continue to move once the market opens and more traders come in and trade, right? And then what I will do second is look at, okay, is there news as to why it's moving up, all right? And then what I do, step 1, so that's kind of filtering through the stocks and then filtering for position and where I want to start to take my entry. The first thing I do is look at the year chart. I draw my supports and resistance lines. Then I go to the 5-minute chart. I draw my supports and resistance lines. Then I look at the year chart and see where I am in relation to the EMAs. I look at my 5-day 5-minute chart and see where I am in relation to the EMAs. I look at on the year chart where I am in relation to the MACD. I look at my 5-day 5-minute chart and see where I am in relation to my MACD. I look at my volume. I look at my indicators, my VWAP, etc. Right? All the things that we just talked about earlier. I'm looking at all that on a 5-minute time frame. And then I'm definitely paying attention to pre-market resistance, right? So if pre-market we're having resistance at $12, then I want to wait to see if we break $12. Or if it doesn't break $12, if we drop back down, what we do as support. So say it goes from $12 to $10. And then finally at $10, so say at $12, we were at the upper end of the MACD, right? So we may not want to get in yet. We may want to start to see it sell off first. And then once it sells off, we want to see it consolidate. And then maybe now at $10 or $11, it starts to make its move. And then we get our indicators to say we want to buy. Then at that point, we'll put our entry in. Okay, so there's sometimes that may take 30 minutes. Sometimes that's right out the gate as soon as the market opens. Sometimes that's an hour later. Sometimes that's not until the end of the day at 12 o'clock, right? So it's just a matter of being patient and waiting for that setup. And sometimes it may not even happen at all. Sometimes it may just stay below the 9 EMA the entire time, which almost this did that entire day. And there's no entry at that point, right? So it's always good to have multiple stocks. So what I'll do is filter, and I'll usually start at the top 5 or 10, and then I'll do that technique. So if I click on this, this will open up the MEDS chart. If I click on AYTU, it'll open up the AYTU chart. This is why we have this all set up to the frequency of 1, because it makes it really easy for me to kind of go back and forth on the charts and see what's going on. So then For AYTU, I'll do the same thing. I'll look at the year trend, draw my supports and resistance. Where am I in relation to my EMAs? And I have it very simple for you here. I have them green. So I already know I'm above the 9 EMA, I'm above my 20 EMA. Cool. I'll look at the 5-day, 5-minute chart. I'll draw my support and resistance. I already know right off the bat, I'm above my 9 EMA, I'm above my 20. I'm below midline VWAP, which is a little concerning, but that was at the close. Obviously now during the after hours, we went above, so we're golden there. I'll look at RSI. Then I'll look at the MACD. Do I have a buy signal? Do I have a sell signal? If it's showing a sell signal already pre-market, then I may want to wait for the open for us to start to sell off and then buy. All right, so I'll map that out. And then I'm looking, okay, is there news? What's going on with AYTU? Is there a reason why it's up 5%? Is there a reason why it's up 20% pre-market? Is there a reason why some of these were up 44%? Is there a reason why there is something like that? So then there's news, right? So then I'll look at the news article, and then maybe I'll go into my market watch, and then I'll see if there's any other news in relation to that stock. Or maybe there's other stocks that haven't shown yet on the gap up scan that are now showing up on news. Okay. And then if I notice that's a healthcare sector, I'll look at the screener, and then I'll look at maybe groups and see which sector has been performing the best out of all the other sectors. And if it's healthcare and it's a healthcare stock that is now gapping up, then hey, I have a pretty good chance this may do well today, right? So that's how I'll use all that. Okay. And then if I want another screener, maybe there's something on Thinkorswim that maybe I'm missing. I'll use my screener on FinViz and go back to screener and maybe filter for stocks that are gapping up 4%. And then I'll quickly use this to kind of look at the chart, right? So all of those things that I've showed you all come to work together, and all of that homework is done pre-market before the market opens. But you also do that homework when the market is open, and say it's not a stock that you didn't see pre-market. Now it's a stock that you're looking at real time. You still do that same practice. You'll still go in here and look at the year trend. That's why on the chart, if you see, I have all main important chart timeframes. I have our year chart right here, and I have our 5-day, 5-minute chart. I haven't gone into the 1 minute because the only time I use the 1 minute is within the first 5 minutes of the open, because maybe it's showing something in here because these are 1 minute candles that I wouldn't see on the 5-minute time frame, but it's showing here much earlier. That's the only time I use the 1 minute, is within the first 5 minutes, or if I'm in a position and maybe here it's showing that I'm going to sell sooner, and then I'll go ahead and sell, and then here on the 5-minute it'll confirm, right? So I have all important time frames. So as soon as I'm hitting these buttons, I can quickly see the year chart already for SRPT. I can quickly see the 5-minute chart. As you start to develop and get good, you don't need to draw those trend lines in right away. You can already see I have a hard resistance at 1. I have support at 1 now that we're above it. Here I can see we're at a support level, but I see very low and choppy candles. This is showing me this is not a stock I really want to trade. Versus MEDS, this is a little bit more consistent. AYTU, this is definitely a stronger move towards the upside. I see that I have resistance though ahead of me at around 160, which was a support line before, but now again, since we're below it, that's a resistance line, and then start to go on and forward, right? So that's how all of it works together. That's my A through Z steps, 1 through however many, and I can write them down if you want, but what I'm doing, looking at the year chart, drawing supports and resistance, where am I in relation to my EMAs and my MACD? Looking at my 5-minute, drawing my supports and resistance. Where am I in relation to my EMAs, my MACD, and my other indicators? Is there news for this stock? Is there not news for this stock? And do I have resistance coming next to me? If I have resistance coming later, what's that percent difference? If it's less than 5, I may not want to take the trade yet. What does the level 2 look like? Do I see a lot of resistance right now? If yes, then I'm not going to get in. If no, then maybe I'll go ahead and take the trade, right? And then from that point, then it's a calculation. Well, I'm willing to spend $10,000 per trade. This shows me here on the calculation, I could buy 6,712. So I'll come in here, 6,712. Hit, put a 1 extra 1 in there. Okay, and then I'll hit my order. Now, when you're placing your order, if you want to get filled at exactly 150, you will place a limit order. This is telling you that I am not willing to spend more than $1.50 per share. If this goes up to $1.51 or $1.52, I'm not going to get filled. If this is below 150, I will get filled because at that point I become the best buyer, right? So that's the limit order. If I do a buy market order, by the time I hit buy market, the price could change from 144 to 150 to maybe 154. So based off of the amount of shares and how many sellers are selling on those share prices, then I'll start to get filled, but it's going to be at a variable price. But in some instances, when you have something that moves like BLPH, for example, you don't really care the difference of 10 cents, right? Because this shit went, excuse me, my friends, this went all the way up 500%, right? So I don't really care if I'm getting slippage of 5 cents when this is a stock that's making 500%. 5 cents isn't going to make a difference for me on where I got filled at, right? So that's why you would do a buy market. If I want to get in now, I don't really care about the variable prices. As long as I'm getting filled within this price range, I'm okay. That's what buy market means. Buy the ask will be by the time you hit this button, because maybe you're a little slow by hitting your limit order, but you do want to buy the best offer that somebody is willing to sell, you'll hit this buy ask. But by the time you hit this, maybe the price was $16.49. And say you have 7,612 shares you want to buy at $16.49. At $16.49, if there is only somebody willing to sell 6,000 shares, you're only going to get what we call partially filled, meaning 6,000 shares you were able to buy because somebody was able to sell 6,000 shares worth. But then all of a sudden, the best offer now, instead of being, $16.50 is now $16.52. You're not going to get filled anymore at that price point. So you'll still have 1,000 shares pending, right? So that's the risk when doing a limit order and a buy ask order, is you may not get completely filled. So it's always good to maybe put it like a 1 or 2 cents above. So then you know that if it hits that point, you'll go ahead and get filled, all right? Versus buy market order, I'm automatically going to get filled, but it's going to be at different prices depending on if there's a seller and depending on what the current market price is, right? Now, a sell market order is going to be, I want to get out now, let me out. So, but the thing to note is sometimes as traders, we add to our position as the day goes on. So say you have 100 shares, and then after that 100, say it now changes and you have add another 100. So say you have 200 shares total and you hit this sell market. Well, this sell market is only going to sell, and all of these here are only either going to buy or sell what's in the quantity here. So if I hit this sell market, but I have 200 shares and I'm thinking I'm going to get out, I'm not, because I still have the other 100 shares pending, because this only shows 100. So to quickly get out of a position, especially if something's dropping drastically and you're like, I need to get out now, you hit this flatten button, and that will flatten your position, what it means, and take you completely out. You'll have 0 shares pending and you'll be out of your position. Okay. So, and if I want to get out at an exact price, then I'll put a limit order to get out and at an exact price. Okay. With the order here that we do a bracket order where we have a stop order, meaning if it hits that stop, if it hits that price or falls below it, it'll take us out of the trade. And then on the top bracket, if it hits that price, it'll take us out of that trade. Okay. So those are the different orders. And then going back to that Excel sheet, or excuse me, the PowerPoint, I have the different order types here. So we just talked about market order guarantees immediate fill, but not at an exact price. Limit order are used to get at an exact price, but fills may not be 100%, right? You may not get 100% filled. Good to cancel orders, we will talk about that in a second, means it's good to canceled. Orders will remain in place until the order is canceled, okay? But I have this link here along with the notes, where you can go and look at other order types that I haven't covered, that I have not covered, such as trailing stops and things like that. So another order that you can do, let me hit the on demand so I don't mess up, is that you can do what's called a trailing stop. Now, what a trailing stop is that the stop, instead of being set at a -5, it'll trail along with the price of the stock. So if I change this here, and let me go to my trailing stop. So this is my trailing stop order. What I'm saying is, if the price of the stock that I'm in at any time falls -5%, take me out of the trade. So this can be really good for you if you're not watching the stock consistently, and say it starts to move up and move up and move up, and say now that your position was at $8, it's now at $10, and then all of a sudden at $10 it drops -5, it'll take you out of your position. But guess what? You would have made that difference from 8 to wherever it took you at that -5% from 10, which what is that? $9.50, right? So you would have made gain from $8 to $9.50. That's pretty cool, right? So that's a great order to have, and this is the setup that you do for it, right? You can also save it, so then whenever you find stocks that you want to trade and you just want to do a trailing stop, you can right click, go buy custom, find your custom order, and then do your trailing stop. All right, so that's how that is set up. So I think we have covered everything for trading and the stuff that I wanted to cover. The only thing that we haven't covered yet is my watch list. Okay, so we covered how to set up the pre-market watch list, but a lot of you have asked the question, what are you looking for long-term holds? What are some of the stocks that we should be considering after this coronavirus stuff is done? What are some maybe even coronavirus stocks that you're looking at that may have potential? So just note, all the coronavirus stocks are going to be short-term plays, maybe a day or two or maybe a week. They're definitely not going to be long-term holds by any means. And then all my long-term stuff are obviously in here as long-term, right? So I've also done something cool in this watch list where I can quickly see the ticker, and I can quickly see whether or not it's above or below the 9 or 20 EMA. So these are my long-term stocks that I'm looking at, and I'm going to share that in my Discord. So where you're going to go to get this PowerPoint, you'll get this PowerPoint in this section over here called useful files. Okay, so I'll upload it here so that you can have it. So this means you're going to need to join the program, so then you could join free, but this makes it easy. Instead of me sending out 1,000 different emails, you can just come here and it's a one-stop shop. So you can join free. You go to the website, hit this join free button, and then you could be able to join free. Okay, so once you join free, that PowerPoint would be here in the useful files. And then in TOS templates, what I've done is added my long-term watch list. Okay, so this is my long-term watch list for you. And then I even added the custom code that I did to add so that you can see the 9 and 20 EMA. All right. And then this is my coronavirus stock list. Okay, so these are going to be the short-term plays. So BLPH, definitely up there on top of my list. It went ultimately 430% on the day, right? This was based off of FDA news. So I'm going to be looking for this for a short-term play on Monday. All right. So depending on where we're at, come pre-market on Monday. Pre-market starts like at 4 a.m., I think, sometimes a little bit earlier. So I'm going to look at that and then analyze and see it. Maybe I'll take a cherry pre-market or I'll wait till the open, and then I'll go ahead and take my trade. So these will be short-term plays, but again, it's the same analysis. I look at the year chart, I look at the 5-day, 5-minute, I look at my indicators, I see where I am, and I determine whether or not I'm going to take a position. If I do take my position, I have my bracket set up to protect me. Okay, TNXP, another example. This went up to 130. This is moving on news. I'm going to wait for this on Monday to see what's going on. All of these biotechs, by the way, all of these small cap, biotechs, even some mid caps right now. There is a mid cap, I think it was DHR. Let me make sure that's accurate. An accurate statement. Pretty sure it was DHR. Yeah, DHR. It has received the emergency authorization from the FDA for rapid SARS CoV-2 test. So then what I'm going to do is I'm going to add DHR to this list. And then I'm going to wait to see on Monday how it reacts to the news. Okay. And then it's going to be a day trade. It's definitely not going to be a long-term hold, because why? You look at the trend, we're below the 9 EMA. So it's not going to be a long-term hold. But if tomorrow this shows as a promising day trade, it may be worth a take, right? So, and that's another thing to note. Just because it may not show as a long-term hold doesn't mean it can't be a day trade, right? Because a day trade, we're only in a position for that day. We're not holding it overnight, right? Swing trading, by definition, you're buying it today and you're going to hold it maybe tomorrow, a week from now, a month from now, a year from now. And then long-term investing, I'm buying now and I'm holding it for a long period of time. So what I would recommend is all of these small cap coronavirus stocks or biotech stocks, I would definitely be looking and monitoring Finviz, Stock Market Watch, the Stock Watch, Benzinga Pro, and filtering for anything FDA news related, especially in regard to coronavirus. And then I would monitor that stock and see how it reacts to that. And I would take a day trade. And you would take your day trade the same way you would take your long-term or whatever. We look at our indicators and stuff like that, right? And then off of that profit, then you start to build up into your account and save. And then you play the long-term stuff, right? So then here's my long-term list. Facebook, Amazon, Netflix, Google, Disneyland, right? Disneyland has been just absolutely crushed due to the coronavirus news. It went from the highs of 153 all the way down here to the lows of like 79. That's insane. Obviously, it's down because of coronavirus, right? Once that all things starts to move out of the way, we may start to move back up. And when do we decide to take our long-term position? Once we start to get confirmation, consolidation, and then start to move back up, right? Here is where people will start to get messed up, is when they don't have this information. And I'm looking at this from a year perspective on, say, UAL. And I'm noticing here we had a couple of green days. People are thinking, hey, we bottomed out, I'm going to buy in. Nope. We're below the 9 EMA. We're still in a ride to get crushed. And guess what? We get crushed and we drop all the way down here, right? So for the long-term stuff, we were looking at the daily chart and we're waiting for confirmation, and we wait for our buy signals, 100%. We do not buy at any time until we get that. But this is a great list. So we have Facebook, which ideally, Facebook, Amazon, Netflix, and Google have outperformed the S&P 500 for the past like couple of years, right? So these are very popular stocks. So these are very big companies. I think these will obviously be able to bounce back from something crazy like this in terms of coronavirus, right? And as a result, we may, in a couple years from now, maybe it may take 1 year, maybe take 3, it may even take 5 years, but ultimately we may get back up to the highs, right? With every bear trend that we've had in the market, there's always been a bull trend on the opposite side of that to move back up, right? So these may move back up, and then I calculate the difference. Or, okay, we're at bottom here. We're starting to consolidate. We're starting to move above our indicators. At this point, maybe this is a 50% gain. Awesome. I'm going to hold this long term, and I'm going to put maybe, I don't know, 20,000 bucks in here, right? Or 100,000, whatever the case, right? And I'm going to try to make back and see if that makes 50%. When I'm in the trade now long term, the only thing I care about is looking at, as long as I'm above the 9 EMA on the day, I'm going to write it out and wait and see what happens. As soon as I break down below the 9 EMA, I'm going to pull out. So that's that list there. But that's how you can use everything I just showed you and use it for the small term stuff. So Facebook has produced some amazing, great day trades. I mean, Facebook, very easy ones. Look at, here's our cross on the MACD. Here's our cross on the EMAs. Here's our move above our VWAP. It goes from 145 up here to about 158. That's a nice little area of profit. Very predictable. And then here's our cross below. We start to sell. Okay. So even though that right now I'm not going to buy and hold this, I can definitely day trade this and make some money. Now, this is a little bit higher. This is 149, right? So you're not really, this has to move a significant price amount versus like something like AYTU that we were looking at earlier, or TNXP that's at $1, right? That only needs to move 10 cents versus Facebook has to move a whole lot more, right? So that's the idea and process there. But hopefully that helps you. So all of that list, as I mentioned, you have to go to the website, go to stockmarketwolf.com, hit join free. Once you join free, or if you already, you're like, you know what, Diaz, I like this. What is this now? I started at 2.5 hour course that you just presented for free. I could only imagine what your paid stuff is. And you know what? I can see the value that you bring to your members from the pre-market. So what I do for my members is pre-market. I do that homework for you. I expect you to do it. So what I do is I'll send a list of stocks that are moving pre-market. You'll analyze these the same, and I give notes on how to filter through that. And then from there, I'm only focusing in on 10. And then from these 10, we're waiting for that move. So then if we go to the daily recap, for example, if we look at going back to this one was sent pre-market, 6:21. This is 9 minutes before the market opened. I said ADAP, we're going to watch it at $2.20. Why did I say $2.20? Because based off of the year trend, based off of the 5-day, 5-minute trend, I saw that there was resistance at 220. So obviously we want to break above that point. And once we break above that point, then we may have room to grow. And then we got confirmation on our indicators to take the trade. We took the trade and then we made money, right? So that's the benefit by joining the program. But even if you don't do the paid stuff, so the paid stuff, you'll have access to that. And then the other thing you'll have access to is how I'm talking to you now live. When I'm trading, I'm also talking to you live, and we're trading together. So there's probably like 50 to 100 people in the room, and we're all trading together, and I'm giving my notes and my tips, like how I'm talking to you, like, hey, this may be an area we may want to buy. I'm looking for the cross here, or et cetera, right? So that's what you get with the paid. So maybe you're like, you know what, Diaz, I like your free stuff. You know what, I want to go ahead and buy, and then you could go ahead and do so here. And again, right now the lifetime is half off, so it's actually $14.99. So one-time payment, you get lifetime access, you get all the paid courses that we have, and then you get to be in the group for the lifetime of the business, right? So, and then if not, you could join free, and then you could just get the free resources that we have. So we have the free course that I've done previously. This is going to be in there. So this is where you'll find that the new video, which is today's video, in here. And then you have access to like all these useful files, TOS templates and things like that. So there's still, even if you don't join and pay, you have all this access for, right? So there's benefit whether you're a paid member or a free member. But I would say to join for sure, no matter what, regardless of whether you're free or paid. So you get access to this webinar, and then you get access to all my long-term watch list that are sent here in the TOS templates area. Okay. So, and then that just makes it easier for me. So then I'm not messaging 200 separate people the same thing, right? You can just join, and then all of that data is there for you. Cool. So I think with that, that should cover. And again, if you want to follow us on Instagram or on YouTube, etc., these are all the links for that, which I would appreciate. And then what I would really appreciate is if you can send me a DM right now of the value, if any value, that this presentation has brought you. So that always helps me, is having those real-time testimonials of what people think. This way other people see that, hey, you know what, I'm willing to help people no matter what, whether it's free or paid, and I'm trying to add value to you. So thank you so much for the people. There's still a whole lot of you in the room for staying in this long. And so with that said, as promised, the rest of this time is your time. So the room is open for you. So at this time, if you have a question about anything that we've covered so far, definitely raise your hand, and I would be more than happy to help try to answer it. Okay, so we got App God with his hand raised.
What's up, dude?
What's up, man?
I just want to first say that, I always appreciate your help and all the resources that you provide to help us, including this webinar. So really thank you for that. So my first question is, do you have any tips on adding to a position, or scalping?
Yeah, so you would use it based off of your risk factors. So if you're at your 5% mark, maybe at that point, the same way at the 5% mark, I'm analyzing whether or not I'm going to take out or I'm going to adjust my stops. At those points, you can also determine whether or not, if you feel that it's going to continue to ride, you could start to add, right? The one thing though, you never ever add to losing trades, ever.
Right.
Right? We do not average down. We get out. We get out sooner than later.
For sure. What about scalping?
If you want to scalp, so that all goes based off of your metrics, right? What type of trader you end up wanting to be, like whether you're waiting for all of this stuff or whether or not within this 5 minutes you're taking profit and then getting out, then taking profit, then getting out, and taking profit, then getting out. That would just kind of depend on you. I don't personally do that, so I can't really give too much advice there.
Gotcha.
But there's always risk involved with that because you would still have to consider how far extended you are off of your indicators, because if you take a wrong scalp, you can end up losing it all at once.
Right.
So you just gotta be careful.
For sure. I also wanted to ask, any reason why you choose the EMA over the SMA indicator?
Just from my experience using the EMA, it's better. I think the SMA has a little bit of a lag to it. The EMA is a lot more tight with the current price.
Okay.
So for me, it works out better.
Gotcha. When you say tighter, what do you mean? It's like
so like based off of the trend, right? So like maybe the 9 EMA is hugging it here. Maybe this 9 EMA is like here, or the simple moving average is like maybe down here.
Gotcha.
Right. So this is giving me a more kind of real time trend of what's going on.
Okay.
But then from my data, I've been able to see by utilizing the 9 EMA and 20 EMA, it's helped me get good entry and exits.
For sure. Cool.
And I show that throughout this entire 2.5 presentation.
Right.
Yeah.
Okay. Sorry guys, but I just have a few more questions.
Oh no, you're good, dude. Go ahead.
So I know you're a long bias trader. Do you ever short or will short in the future?
So then that I knew that was something that I was going to cover. So shorting is the same setup for selling. So I'm waiting for this cross on the MACD and the cross on the EMAs to consider going short. So like if we were to look at, let's go back to UAL, right?
Okay.
We have our cross, and then from here we go down to the downside, right? Obviously on the year chart, this would have been a beautiful short, right? That's what I'm looking for. There's other strategies involved. So like sometimes you can have like squeeze plays where the 9 EMA is below the 20, but you're kind of squeezing. And sometimes right now I wouldn't do that because a lot of the times I've seen short squeezes and we start to move back up. But so what I like to wait for now is just confirmation. So I wait for that 9 EMA to cross below the 20, and then I'm taking my short.
Okay. Do you ever short or will short like on your streams?
I don't do that on my streams, and the reason being is that a lot of people are new, right? They're sometimes beginners, maybe it's their first year, maybe it's a couple years, but there's a lot more risk involved with shorting.
Right.
Because your losses could be exponentially high.
Right.
By theory, infinite, right? If you don't pull out, right?
Right, because it could just keep going up.
It could just keep going up. Versus if you're just going long, the only thing you're going to lose is your position. Right? So that's why I don't do it with that, because I already noticed people don't manage their risk going long. So it makes me think they're going to manage their risk going short.
Right.
So if people want to short, I leave that to them.
Okay. My next question is, do you have a morning routine that you do before the stock market opens to kind of better prepare yourself?
Yeah, so that was that whole half an hour ending. I'm not sure when you pulled in, but what I'll do is I'll look at my pre-market watch list. I'll filter based off of market percent, I'll focus on maybe the top 10, and then I'll look at the chart pattern. So then I'll look at my supports and resistance on the year, look at my support and resistance on the 5-minute. I'll look at my indicators on the year chart. I'll look at my indicators on the 5-minute. I'll see if there's news. And then from there, I'm mapping out where I can take my entry. I'm noticing, okay, if I'm already at the top of the MACD, maybe I'm going to wait first to see if there's a sell-off and then maybe later on get in. Or if it's already presenting as a buy, maybe I'll get in right at the open. And then I'm looking at all the other news sections, so Benzinga, Market Watch, and stuff also to see even if something doesn't hit the scan, maybe there's some news that hasn't shown and started to take effect yet here, but it's already taken effect on the news, and then I'll put that stock in and then analyze the same thing, the year chart, the 5-day, 5-minute.
Okay. Anything that you do like physically, like I know you love Cocoa Puffs. Do you
like
Cocoa Puffs?
Oh, I see what you're saying. Yeah, dude, I have my breakfast first thing. So my Cocoa Puffs and my cereal, and my cartoons real quick to kind of, line up the mood. Sometimes I'll go for a run. Sometimes maybe I'll do like a quick, 20 push-ups to just get the blood flowing and get my mindset. And then I'll drink water. I won't drink coffee because it'll make me all jittery. And just kind of get awake, maybe like a shower right in the morning. And just to get woken up and ready to go, and then ready to hit it. So that's what you were meant. So yeah, that's my routine.
Gotcha.
Wake up and do all that kind of stuff.
Cool.
You obviously definitely don't want to wake up, roll out of bed, open up your laptop, and then try to take a trade. Yeah.
For sure. And I've actually done that before, and there's like a huge difference. So I just wanted to see what you.
Yeah.
If there's anything that you did. All right. Last question is any advice on managing your emotions better?
Yeah. So managing your emotions, the two main emotions is fear and greed. Right? That's for anything in life, right? Fear
and overconfidence for me sometimes too. That's like the third one.
Yeah, right. But that's where fear comes in, right? Because if you're not confident, you're fearful. Right. If you're confident, you already feel confident with your setups. That's why you have to have your A+ setup. That's why you look at all these things and kind of see what works best for you. So then, in terms of your psychology, is when I'm in the trade, I have to make sure I stick to my rules. That's why me personally, I always try to use this for the most part, because it'll take all that thinking out, because then it's just the system working.
Which one?
The my brackets, right?
Oh, okay. The 5 and 10%.
Yeah, I'll put my brackets in and I'll just let that do what it does. If it hits my 5%,
right,
it's obviously gonna suck. But in my experiences, especially when I first started, that 5% has turned into negative 50%. Sometimes it's turned into negative 100%. And then at that point you're screwed, and then you're like, at that point you're trapped, right? So a small loss of what would have been $500 is now a loss of $2,000.
Right.
And then what ends up happening is you start to revenge trade. So then the next trade, instead of following your rules, you end up trying to triple your position, so then you could make up for that loss that you just had. And then that one takes a loss, and that hits your 5%. But now since you're triple, it's now triple your amount. So instead of being negative 500, it's now negative 1,500. And now what was now should have been an initial $500 loss is now a negative $4,000 loss. Right. And then it just starts to snowball. So the one thing that I always recommend is trying to let the system do all the work for you. And then in terms of being confident, is knowing that you have an A+ setup. So my A+ setup is, if I'm at a support level on the year trend, I'm above my EMAs, I have my bull cross on the MACD, I have good news on the stock, I see no resistance coming up on the level 2, I see more buyers than there are sellers, I see volume picking up, all things are checked off that I talked about earlier, boom, I'm definitely taking that trade. And at that point, I'm just putting in the system, and I'm letting the system do its work.
Right. Yeah, that's just my problem. Just I guess the bottom line is I just have to be more disciplined and train myself to be more disciplined.
Yeah, man. It all just comes with discipline. Just practice. And then that's the other thing. And then that's a good message for everybody is like, you can read all the books you want on trading that I showed earlier. You can watch this video over and over. You can practice maybe a month, but and to kind of put it into perspective with football, right, or baseball, you can read a book on baseball. You can watch videos on how to hit a baseball. You could get a batting coach to teach you how to hit a baseball you can go for a month with that coach and practice for a month. But to think then you should be an MLB baseball player, you are highly mistaken, right? You have to practice, and it's going to take day in and day out, and it's going to take years to develop. So obviously right now people are trying to learn quick because obviously, unfortunately there's people that have lost their jobs. There's people that are worried about their 401k. There's a whole lot of reasons why people are worried, and it 100% makes sense, but you can't speed through this. You have to practice, and that's why this on-demand feature is a very good practice, because you can practice daily with it, even on the weekend. So like even after this video, you can go and practice some of the tips and see if they actually work for you or not. So that's my take on it. And as that develops, then your confidence will develop, right? You'll start to see where you win versus where you lose.
Right.
Cool,
man. Awesome. Thanks again.
Yeah, no problem, man. Thank you for the questions. All right, we got Matt De Los Santos. What's up, Matt?
What's up, big dog? Can you hear me?
Yeah, what's up, dude?
How you doing, man? Diaz, it's good to talk to you, bro.
Yeah, man, it's been a while.
It's been a while. Just awesome for people who are listening to see where you've been and what you've done. And I've known you since high school, and just to see, one of the hardest workers in the room, and to see what you build and just the time and dedication, man. It's really awesome to see you helping so many people.
Thanks, man.
Real quick, I have a few questions. I'm sure I could hit you up later on a couple, but just how much do you think you should get started? I'm kind of new and just in the investing in
that's a
stocks.
good question. Yeah, that was another thing I was going to cover in the beginning.
I heard the percentage part.
Yeah.
How much with the 2-to-1 ratio, but yeah, what's a good number wise? I mean, shares, what's like good
so if you're day trading, I would recommend no less than 1,000. If you're going to be long-term holding, I mean, you could essentially start with anything, right? And just start to build up over time.
Right.
But if you're day trading, the reason you want to start with less than 1,000 is because you are going to take losses along the way. So if you have less than that, that will start to go really quickly. And if it goes really quickly, what that'll start to do for people is start to discourage them. And then when you get discouraged, you're not going to want to try again, right? But maybe you were just going through a rough patch where if you put a little bit more practice in and it took a little bit more losses, you would have started to get into your win groove, right? So I think less than 1,000 is the bare minimum, 1,000 is the very minimum somebody should put in. Obviously, if you have more than that, then that's better. I think 5 to 10 is a great middle ground of being in day trading. Now, when people have less than 25,000, what's going to happen is 25,000 is the minimum required to day trade unlimitedly on a margin account. Now, if you have a margin account, what that would mean is as soon as I take my trade and as soon as I exit, my profits will become realized in my account, and then I can use that throughout the day and continue to trade. If I don't have a margin account, the next account a lot of people get is a cash account. And people get a cash account, and the reason they do that is so they are not governed by what's called a PDT rule. A PDT rule says that if you have a margin account and you have less than $25,000 in that account, you can only take 3 day trades per week. Now, that's not going to be very beneficial, because, I mean, if you take your trades on Monday, Tuesday, Wednesday, Thursday and Friday, you may be missing out, right? Or maybe you take all 3 day trades on the Monday, now you're missing out on the rest of the week, right? So to avoid that rule, people open up a cash account. Now with a cash account, you could take as many day trades as you want, but then the caveat with that is that you're limited by the amount of cash in your account. So if you have, say, $5,000 and you use $4,000 on Monday, this is the same kind of thing like a checking and savings. It takes a couple of days for that money to affect in your account. So that money that you used on Monday and whatever profits you made on Monday are not going to be able to be used on Tuesday. So now only Tuesday, the only thing you have is $1,000. But then come Wednesday, you'll have the profit and then the money that you used on Monday. So that's the risk with the cash account, is that you are governed by how much cash you have in there. And then on the day, it's not going to become realized right away. So if I use 4,000 on one trade, and I take a loss and I get stopped out at -5%, I only have 1,000 left to still use and try to take another trade, right? So that's the other risk. So if you have a $5,000 account, it's best to spread it along the days, but then it's also better to spread it along your trades within that day. So if I have a 5,000 account, maybe I'll allocate 1,000 or 2,000 on Monday, and then of that 2,000, maybe per trade, instead of putting the full 2,000, I'll put in $500 per trade. So then to kind of even it out and give me a little bit more room to take multiple trades on the day.
Gotcha. And then you're being taxed on that gains that you get from the profit when you do sell, correct?
Yeah. So it depends if you do your taxes quarterly or yearly. You only get taxed on the capital gain that you make overall. Okay. And then if your brokerage has fees, those fees are write-offs. Okay. But I'm not the tax professional. I would speak to you. I have to say in the video, speak to your accountant, folks. Don't go off of just my advice. But that's the rule of thumb. You get taxed on the capital gain overall, based off of the quarter or on the year, and then your commission fees for taking the trades are write-offs.
Got it. And then what brokerage do you use in order to make
this is Thinkorswim. So this is through TD Ameritrade. Yeah.
Copy. Okay, cool. Thank you, brother.
Yeah, thanks, Matt. All right, more questions. Let's see, we got Nestor. What's up, Nestor? You just got to unmute your mic, bud. Or maybe he left. Bathroom break.
Well, I'm sorry. My question just got answered by the last one.
How's it going? Oh, it was accident?
No, I was going to ask about the amount that I have.
Okay. So he has the same thing. Okay, cool.
Thank you. And
No
great
problem.
job. Thank you.
No problem. All right. I got plenty of time for more questions. So if you have questions, don't hesitate to ask. You want to talk about any long-term stocks you're holding, long stocks you're considering, swing trades you're considering, anything about technicals that we've gone over. If you have any questions at all, definitely feel free to raise your hand. All right, so we got AS is the name on Zoom.
Hey man, what's going on?
What's up, brother?
All right, so I had a quick question about you coding the indicator in Thinkorswim. I was wondering how you did that.
That's top secret, dude. That's like $5,000 worth of secret right there. No, I'm just kidding. Which ones?
So the VWAP that you were talking about, I was just seeing it on the top there. You don't really see all the mess in the chart. So everything seems to be organized up there. So I was wondering how you actually go about putting that up there. I know you have to like code all that stuff in there, but I didn't know how to go about doing that.
Yeah. So since I'm giving you guys this chart setup, what you're going to do is right click and go to edit studies. And then you'll see my custom VWAP woof. And you'll hit this little scroll bar and it'll show you the code that I use for it.
Okay. All right. And would you be able to go through this company, JetBlue? I was actually thinking about buying it.
Okay, so this is an airline stock.
Dip. Yeah. So because of the recent dip, I figured like it would be something good, along with Delta Airlines maybe.
Yep, those are on my long-term list.
Okay.
Yep, so both of those though, you're not investing yet, right? Look at the year chart.
So yeah, I'm not investing in terms of like, I'm not putting in a bunch of money yet, but I was thinking about buying it because I thought maybe it bottomed out recently. So I figured maybe I would start doing like dollar cost averaging a little bit. So buying small shares on it and just keep adding to it, lowering the average.
If you want to do that and lower the average, that's up to you. But me personally, I rather wait until it bottoms. So how I know when it bottoms is once it starts to consolidate and once I break above the 9 EMA, at that point, we're no longer at bottom. We may start to move up. So this is a really good question because I had a colleague who got into United Airlines and they saw on the year chart something of, and let me take off the VWAP, it's bugging me. They saw something on the year chart where they saw it kind of moving like this, so it looks like we're consolidating.
Yep.
And they saw this green day here, and they're like, "Oh, we're gonna start to move back up." Well, it went from $50 to 17, right? So,
Right.
I mean, and if you're averaging here, now your average is 17 to the 50 divided by 2, right?
Yep.
Me personally, I rather just wait until it hits bottom, wait till we get our confirmations, and then buy.
And so you're still looking at the one above 9 EMA, looking at the resistance, you're looking at the RSI and MACD crossover, correct?
Yeah, so what I'm gonna wait for JetBlue, United Airlines, Delta Airlines, Norwegian, all those different airliners, is I'm waiting for on the daily chart, which is the year chart, we have a candle above the 9 EMA. And once we have that first candle above the 9 EMA, then I'll analyze and see where we are on the MACD, the RSI, and all that. And then at that point, I may be confident to take my trade. But
Okay.
in all honesty, I think we still have a long way to go to hit bottom. I mean, you have all the stuff going on in California with, everyone asked to be home. You have people losing their jobs over it. I went to a breakfast restaurant to get takeout, and the guy said he has like 6 different businesses here in Southern California, and he's fired 25 employees.
Yeah.
That's 25 people without jobs. There's millions of people that are going to be losing their jobs over this. We're definitely going to be in a recession. We are already in one, and so
We are already one. Yeah.
we're already in one, and so the prices are still going to drop, my friend, and I think. And so
Yeah.
I'm going to wait and see, and wait first for confirmation, and once I get that, then go long. And some of these companies, depending on where they are, like if they're biotechs or some other ones, they may not bounce back, right? So we'll see how they end up doing. But that's what my advice would be, is just kind of wait and look at that trend.
Okay. I got a couple more questions actually.
Sure.
So, I mean, right now it's pretty, these are like unprecedented times really, but do you keep track of like anything in the futures market to like sort of look at how the markets might open that for the coming day? Or do you do any of that? Or do you just go off the watch list?
I just go off on my watch. So right now, all I'm doing is day trading. So I'm just looking at the small biotechs, and so I'm paying attention to my watch list. And then I have my long-term holds that I'm going to be looking for, and these are based off of where they're currently at in terms of highs and what has currently been affected most, right? So obviously airliners have been affected most, cruise liners have been affected most, right? So it makes most sense that, and the only reason that they're affected initially is because of the coronavirus, right? Now they're going to be affected because of they may not be able to pay their employees back, or they may start to lose business and whatever the case, right? So there may be some longer downturn effects that play into the coronavirus, but in those cases, I don't really care about futures. I don't care about the Dow. I don't care about any of that. I'm just waiting until I get confirmation. The same thing with the S&P 500 that I was talking about earlier. Obviously, news and all that plays a role, but technicals tell the story, right? So that's what I go off of.
Okay. And one last question. My brother and I have been actually watching your video. So he wanted to know whether you started out with penny stocks, investing in that, because we kind of want to start off with something of a small account. So how would you go about it if you were just starting out with a small account?
So when I very first started, it was all small cap stocks. So penny stocks are by definition less than $1. Small caps are $1 to that $20 range. So I played the small cap stocks from $1 to $20, and I primarily focused on biotech stocks, which I still focus on now, or science stocks, tech stocks, whatever the case. But at one point, I was doing like the ETFs, so like DGAS and UGAS and all those, right? Because they're inverses, so they're kind of easy to predict.
Yeah.
And then just taking small profits there. So that's kind of the things that are different now. I don't really focus on ETFs except obviously the S&P 500, but other than that, I'm just playing the small caps. And then after this period, now that, this is a very bad time for a lot of people. A lot of people, including, myself and others around the world, but from usually downtrends like this and depressions, there's a lot to the upside that people can make. So yes, this is a downtime, but we've been preparing for this. And then so now it's just a matter of waiting for that uptrend to come and then just capitalizing on that. So that's when I'm going to start transitioning from my short-term daily stuff to then now throwing money in for the long term. Right.
Okay. Thanks very much, man.
No problem, dude. All right. We have Gareth.
Hey, how are you?
What's up, man? Yeah.
I'm good. So I just like building on like how you were talking about good stocks to buy now, for example, like the Delta Air. Well, not right now, but to look at. I was wondering, what about like Disney and
Yeah. So on my list to go right here, I have Facebook, Amazon, Apple, Netflix, Google, Disney, OLED, United Airlines, American Airlines, JetBlue. I think LUV is Southwest. I have Delta Airlines. I have SkyWest, and then I have biotechs that I'm looking at, and then the small biotechs that may make pretty big bank if there's especially FDA news. And then I'm looking at the S&P 500, right? So Disney is definitely one, right? So Disney is affected by coronavirus, right? Nobody wants to go to Disney right now and get cooties, right? So
yeah,
obviously, if Disney did not have coronavirus, Disney would be killing right now. You have Disney Plus, and Disney's a popular place. So do I think this will go back up? Most likely, right? So I'm going to wait and see how this does. That's why it's on the long-term list.
yeah, and just building on how you said for that you think that it's gonna come more down, and you said that the only way or one of the ways that you can figure out that it's going up is once you start seeing that consolidation and that 9 EMA. So for that on your list, you're going to have to kind of like, are you going to kind of check that like every day sort of thing, day to day, until you start seeing
so I mean, you could check it day to day, but obviously there's so much going on that I'd probably check this on a weekly basis. So like maybe, maybe midweek, maybe the start of the week, maybe midweek, and then maybe the end of the week, right? Or maybe just the start of the week and then the end of the week, right? Because these are days, right? So if something happened within a day, there's still opportunity for you to get it on the second day or third day.
Yeah, no, I see that.
Yeah.
I appreciate the value, man. I've been listening since 6 o'clock or like 9 o'clock. So I've been like listening diligently, making notes, man.
Thanks a lot for staying that entire time.
No, man, it's really valuable. I appreciate what you're doing. And yeah, man, keep it up. Thank you so much.
Thanks a lot, man. Appreciate it. All right, more questions? We still got some people. Any question's a good question. There's no bad or wrong question. Feel free. All right, we have Jay again. So go ahead, Jay.
What up, champ? Hey, when are you gonna put it on the useful file so I can rewatch this? And
yeah, so as soon as this is done, what's going to happen is on the Discord.
Yeah, you can put on the useful files.
Right. Where'd my Discord go? On the Discord, the PowerPoint is gonna be in the useful files. Okay. And then the video, I'm gonna have to upload it to YouTube. And then once I upload it, it'll go in the same area that I have the free course. So then there will be essentially 2 free courses, right? Both talked about maybe a little bit of something different. So you can have both for free. So then it'll go here. Depends on how, this is 3 hours worth of content, so it may take a little bit. But once it's uploaded, it'll be in this area. So look for it sometime tomorrow. Probably mid-afternoon is my guess is, because it's 9 o'clock here. So I'm going to go have dinner with the family, go spend time with the kiddos before they go to bed. And then tomorrow morning, I'll upload it. But right now, I'll download it so that it's running. And it'll probably take a while. So then in the morning, it should be ready. And then by the morning to mid-afternoon, it'll be posted.
Cool. What about the link for the custom template with the emails?
So that'll be in the PowerPoint. So the PowerPoint, can you see this area here that I'm typing?
Yeah, but it's kind of small. I got a little laptop myself. So.
Oh yeah. But you'll have the PowerPoint as a whole. So,
yeah.
So then you'll just open up the PowerPoint on your laptop and then just go to the notes.
All right, cool. Hell yeah, you the man, brother. Mamba mentality. Monday.
Heck yeah. Thanks, Jay. That's funny. All right. What else we got? Gareth again?
Yep. Hey, can you hear me?
Yeah.
All right, sounds good. Yeah, it was just a quick little question on how about Tesla? Like, it went up to almost like $1,000, and we saw it dip back to like 300. Now I think it's around 400. What'd you think about that? And like, could you like kind of elaborate why that happened? And do you think it'll go back to 700-800 maybe sometime this year or next year?
Dude, that's a good. I don't even have Tesla on my list. I should definitely add that to my list. Good. That's a definite one to definitely add. But in terms of why it went up, why it went back down, I can't say that, right? Maybe people were buying back up, or maybe some people were short and they're covering their position. It's hard to tell with currently what's going on in the market. But this is not a buy yet because we're still below the 9 EMA. And this is still on the daily chart, right?
Yeah.
On a 5-day, 5-minute chart, you could definitely take some day trades in here, right? Because, I mean, here's a great opportunity, right? 436, and it went all the way up to 470. You have your cross on your MACD, cross on your EMAs, boom, take that trade.
Yeah, nice.
Cool.
Yeah, that's everything, man. Thanks.
All right, thanks, man. But I need to add that to my list. So thank you for pointing that out. What was I thinking? All right. Add to, what's it called? Wolf long term. Boom. Now we got Tesla. All right, let's see. We have Jay and Gareth asking questions. Let's see if there's somebody new that wants to ask a question. Just raise your hand and you'll pop to the top of the list. Any takers? There we go. We have Shaped Trader is the username.
Hey man, can you hear me?
Yep.
Oh yeah. Andrew, I got a question about options course that you're gonna add in second quarter, I guess.
Yeah.
Can you tell about options course a little bit? How do you guys approach options? I mean, do you want day trade options or just like a regular option?
Yeah, so we do both. It'll be day trading and the long-term stuff. So buying calls, buying puts, selling calls, selling puts, doing the iron condor, the whole nine, right? So all of that will be discussed. But for the purpose of this, I'm not going to discuss options in this free course just because there's people that are just wanting to learn just the day trading and long-term.
Oh, okay.
Yes, if you want to learn the options, that option course will be available. We're expecting it to be available at the end of this quarter, but with kind of the coronavirus stuff, and then we have some stuff going on here at the house, it may push it into the very beginning of quarter 2. So within the month for sure. But we've had right now we're kind of dealing with a leak at the house, believe it or not. So a lot of family stuff going on, and then with work, and it kind of delayed some of that stuff. But it is expected to be delivered. We are on track. So once that gets delivered, that's a good place to go. But if you're wanting to learn about it and not wait, I mean, again, Thinkorswim, you can open this up, hit the education tab, and there's a whole plethora of options courses for free.
Yeah.
Cool.
Yeah.
All right. So then learning to trade. Let's see what you got, man. You got the mic. You just got to unmute yourself. Nope. Oh, there you go. Hello. Learning to trade. All right. No takers there. All right. So if you have a question, raise your hand and I will answer it. We are at 9 o'clock, so I'll give it a. All right, so learning to trade open their hands again, so I'll give you another opportunity.
Hi.
Hey.
I'm so sorry. I had to go to the privacy settings and do that whole thing. I just had a quick question. It's more of a like an opinion, I guess. What is your opinion on Robinhood? Do you feel like that app is actually beneficial, or do you think it'd just be better to stick with, you know, TD Ameritrade when learning?
Yeah, so Robinhood was designed to be very simplistic for beginners, and it was a great app when it first started. But recently, there's been a lot of negativity around that app. Some people haven't been able to sell their positions when they're in, and as a result, have taken big losses. Some people have had problems getting out of their account. So, in my opinion, in my professional opinion, I would not use Robinhood. I think Thinkorswim is a great app. Before, it was, in my opinion, the most dominant, but now that it went to free commissions, there's been a little bit of hiccups with it. Nothing too crazy, but I would definitely stick to the bigger brokerages: Fidelity, TD Ameritrade, E-Trade, Lightspeed, ones that have been around much longer. Even though they may charge commission fees, it's worth it to make sure that you're able to get in and out of your position. So that would be my opinion. I've used Thinkorswim my entire trading career. I've tried to dabble in some of the others. I do use Trade Zero to short because Thinkorswim doesn't provide a lot of opportunities to borrow shares. And then I've used Lightspeed before, but I definitely recommend using Thinkorswim for charting.
Okay.
Some people have used Webull recently to take their trades, and I think I haven't used it personally, so I can't give my opinion on it, but the people that have used it say it's a great app. It's like essentially Robinhood 2.0, with a little bit more better features, and allows you to trade options as well. So I know people have been using that. I use TD Ameritrade solely. I use it on my desktop and I have it on my phone, which is another benefit to having both, is that the watch list that I have here, I can have them on my phone too. So any watch list that I save on my desktop, I can upload on my phone and be able to scroll through the different stocks. So having them both together just makes more sense to me.
Okay. Yeah. I've learned so much so far, a lot more than I've ever learned in any other, I love the results. Most people will just try to sell you a product. I love that you're showing. That's amazing.
I appreciate that. Thank you.
Of course.
Did you have any more questions, or was that your main one?
And I guess this is kind of another, an opinion question. Are you at all trading any cryptocurrency at all?
Ooh, no. I primarily just focus on stocks.
Okay.
And then like for the long-term stuff, primarily on actual companies that have like a product, and I know that that product is needed. With crypto, I can't really gauge that too much unless it's like a crypto company with like another stock type company, then like those hybrids, then maybe. But even then, I'm not really too focused on crypto.
Okay.
That's not my expertise, but yeah, good question. And then that's another good point. So for people, obviously there's many different things you can do as traders. You could get into options, you could get into futures, you could get into stocks, you could get into crypto. You could be a short-term trader, you could be a long-term investor, you could be a long bias trader, you could be a short bias trader. So it just is a matter of what's your preference and what ends up being your edge so that you can be profitable. My edge is small cap stocks, primarily biotech. And then from there, I'll invest in the long-term stuff. And obviously with my education and science, it makes the most sense of why I trade biotechs, both short-term and long-term, right? So you'll find your edge in the market. And my take would be to just focus on that until you master it. There's this old saying in martial arts, like, I fear the man who practices one kick 1,000 times versus a man who practices 1,000 different kicks one time, right? Because you're not mastering that at that point. You're just trying and dabbling in all these different things, right? So become a master of one. Okay. That would be my take on that one. All right, but great question, reminded me to bring up that topic. All right, so any more questions? I'm still available. I'll give it another 15 minutes or so, so feel free to ask away. This has been already a 3-hour presentation. I'm definitely here for 3 hours and 15-minute presentation. I'm here for another half an hour to make this an even 3 hours and 30 minutes if you need me. So go ahead and ask away. I'm at your discretion. All right, so we have Jay and Shaped Trader again with questions. Just before I give them the mic, is there anybody new that has not asked a question? We have Steven, we have Mikey, we have Ken, we have Josh, we have Emmanuel, we have Andros. Okay, all right, so I'll give the mic to Jay. All right, go ahead, Jay.
Okay, so what kind of monitors do you have? Or I know you're gonna put it in the useful files, but since I got you here, might as well ask.
Yeah, so I have 3 that I use. I have an ultra wide monitor, it's a gaming monitor. It's 49 inches, and I think it's the only ultra wide gaming monitor that's out that's 49 inches. So you would just go to Amazon, 49-inch ultra wide curved monitor, and you'll see it. And I think I provided the link for that in the PowerPoint. Yeah, and then the other 2 that I use are MSI monitors. Those are also gaming monitors, and those are 27 inches. I think the model is MSI Optics Mag 27CQ, and those are fantastic. Me and the little guy play video games using those. Oh man, the graphics, the speed, and everything on those things are just awesome. So I like those monitors.
All right, brother. Thank you.
No problem. Any more questions? Jay again.
My bad. What about the tower?
The tower. So with that, I just have the
a regular
wall mount.
No, like the what's that shit called? The tower that were like not the monitor, not the keyboard, not the mouse, but the tower. Isn't it called a tower?
I'm not sure.
The thing that boots up.
Huh?
The thing that boots up, or like the gaming. Let me see.
Oh, I just used my laptop.
Oh, okay. Oh, okay. So you got and then you have like cables coming out of the laptop to go to the monitors?
Yeah.
What kind of cables are those?
So the cables that come with the monitors themselves will be the HDMI cables, but then I have the it's kind of like a docking station. It's like a USB dock where I could put in my other stuff like my keyboard and my
like multiple.
Yeah.
All right.
And then my laptop that I'm using is also an MSI gaming laptop.
Okay. All right, brother. Thank you.
No problem.
Yeah.
All right. So anybody else with questions? All right. We got Emmanuel. All right. Go ahead, Emmanuel. You just got to unmute your mic.
The tower you actually use to actually process the computer. What kind is that?
I caught you in mid question. Sorry.
That's all good. That's what he's asking about, like what kind of processor you use, what kind of tower you have. Are you using Mac? Are you using Dell, Windows?
It's a Intel Core i9 processor from the MSI gaming laptop.
All right. How much RAM?
RAM is, let me see here, 32 gigabytes.
Okay. And memory?
Memory, it looks like 2,666 megahertz.
Okay. Okay. Yeah, because that helps a lot with the processing power with the computer, make sure it's accurate.
Yeah, yeah,
I appreciate it. Thank you.
no problem. Any more questions? Daniel, what do you got, Daniel?
Andrew, this is Daniel Chavez here. Can you hear me?
It's kind of hard to hear you, but
Yeah, can you hear me now?
still a little muffled.
How about now?
A little bit better.
Just quick question. When you're trading stocks, I'm used to options. So are you able to trade after hours or get out of trades after hours when trading stocks? Or
You're asking about trading after hours?
Yeah.
And how you put that position in?
Correct.
Yeah, so all you have to do is when you're putting your order in, let me go back to the on-demand. And when I hit this buy button, what I'm going to do, let me see, it's not showing here. Edit, there you go. So when I put this order in, what I'm going to do is change these instead of day to good till cancel extended. So extended is going to be the extended hours.
Okay, got it.
Cool.
Awesome. Thank you, man.
No problem. A little hard to hear you, but we were able to make it out. All right. Let's see. Looks like we have Emmanuel again with another question. Yes, no?
No, my bad.
Okay. All right. Anybody else? Go ahead, raise your hand. We still got 8 minutes. All good? Going once. Going twice. Oh, Jay has a question. All right. Jay.
Yeah, how do you trade a pre-market, or is that something you got to do with the broker? Like with
So it's the same. It's the same thing for after hours. You change it to the extended.
Okay.
And you just do a pre-market. Now, Thinkorswim, I believe, only allows you to trade at 4 a.m. Some brokerages will allow you to trade earlier as soon as pre-market starts, but for Thinkorswim, you could trade at 4 a.m.
That's
my
West
time.
Coast time.
That's West Coast
I'm on
time.
West Coast too. Lakers, baby, we're gonna win.
Hell yeah.
Yeah.
Kobe.
You already know this. All right, Sam. See you Monday.
All right. Thanks, Jay.
All right.
All right. Any more questions? 7 minutes. Shaped Trader. What's up, bud?
Hey, one more question about the lifetime membership.
Yep.
I know that you are already giving the like 50% discount. It's a huge, and I believe it's a lot of value in that. But I was wondering, for the guys with a small account, do you have or will you have any options like to split this for 3 months maybe, or some type of like split payment options maybe?
Yeah. So I was just talking with my wife about that and stuff. So I understand $14.99 could be a lot at once. So what we're going to be doing is within Discord, we have this little. So what you're gonna want to do is join free first, and then you'll go to this upgrade room, and you'll type in the word upgrade. And what will happen is a bot will send you this link. Click on this link here, and then you can pick the different payment programs that we offer. Now, one of the in your role, now all I have right now is monthly, lifetime, and this quarterly is not the lifetime quarterly. So I'm going to remove this, and I'm going to call it lifetime quarterly, and I'll divide the lifetime membership payment by 3.
Oh, okay.
Okay, so then
Yeah.
and then after that is done, then you don't have to pay anymore. But the only thing with the lifetime quarterly is that it's going to be a contract. So if you pick it, if you decide to cancel, you have to come up with the difference. So, and if you're doing it on a quarterly basis, then that means the courses will not come to you until the payments are completely done. You'll still have access to the Discord and still be able to join us for the watch list and the live stream. But the course itself, I'm not going to give to you all up front, because then people will cancel up front, right? And then you have everything. So
Yeah. I got it. So what?
Once
Until I
payments are
pay.
done, then you'll have the courses.
Yeah, I got it. Thanks.
Cool.
Yeah.
All right. Any more questions? That's a good question, though. That brings me to that topic. So we are going to be implementing that, where we will have that quarterly payment for lifetime membership. The only thing with that is you won't get the course until your payments are done. Okay, but you will have access at the quarterly value to take advantage of the discount. And then once your payments are done, then the course will be distributed to you. So within a year, you'll have to wait a year, right? Because it's based off a quarter, unless you pay off sooner, and then get access to everything. But in the meantime, you'll still have access to our watch list, our live stream, and then the other premium services that we give to members. Okay. Emmanuel with the question.
Yeah, so that's a good question he asked earlier. I paid for the puppy course. Would that be kind of anything there for that? As far as the lifetime?
So the puppy course is a separate transaction. What we were doing at one point was prorating people. But we are no longer doing that. If we do prorate you, it's not off of the discounted price. It will be off of the full price.
Okay, cool. Thank you.
No problem. Any more questions? Still got a couple minutes. All good. Going once, going twice. There we go. Shape Trader, what do you got?
I don't have a question anymore, but I just want to say a lot of thanks. I mean, sorry, English is not my first language, so that's why I kind of nervous a little bit, maybe.
Yeah, I get you.
So, yeah. I just want to say big thanks to you. The value you provide to us for newbie traders. So, and I see that you are like from bottom of your heart, you are providing. You want to help people, and I think a lot of people in your room they know this. So just thanks a lot, man.
Thanks,
I
Kai.
appreciate it.
Appreciate it. So then if anybody also has feedback or question, feel free to raise your hand, and then we could have it here on the recording. And then when people watch this, they could hear that feedback, which I truly appreciate. So if you do have some feedback, I definitely appreciated that. So thank you. So we got Mikey. Where you got Mike? Oh, hang on. I got to promote you to panelist because you have an older version. But let's see. Go ahead, Mike.
Hey, can you hear me?
Yeah, what's up, Mikey?
Hey, Andrew. No, this is just a simple one. I mean, straight value, man. Family guy. I know Andrew personally. Guys, this is a guy. I want to say thank you, Andrew. You made it very simple, man. Like other people have been saying, you go on a YouTube video, but these things are really straight. You laid it out perfect. So thank you for your time, man.
Appreciate it, Mikey. 100%, man. Thanks, man. All right. Anybody else questions or feedback or anything they want to say before we end? feel free. All right, going once, going twice, 2.5, 2.25, 2 7/8. Just kidding. 3. All right, guys, that is exactly at 9:30. That is a 3.5 hour presentation that you'll be able to look back on and view. I truly appreciate you guys being here. This is why I started this, is to help people, just like the people that just talked previously have said. I mean, I still work for a living as well. I work in the biotech industry, as I mentioned earlier, and I do this. So I work at night and I day trade in the morning. And I do that because at biotech, I get fulfillment because the products that we do help people with cancer, rheumatoid arthritis, Alzheimer's, etc. And then I get value by doing this because it's helping people reach a financial goal, right? And for me, when I first started, as I mentioned, I started at 19 as a single dad. I was working at the mall for $7.25. And through that time, just put in the hard work to get the education. So the biology degree, the Master of Science degrees, picked up a book and started to learn to trade when I was 19, and then went through all those different mentors and things like that. And I think we're on this earth to help people and help provide value to people and to try to leave it in a better place than how we came. So hence why I'm here and why I'm trying to help people. And as you can see, this is for free. So at none of this time have I charged you for anything. You'll be able to have all of this for free to be able to share it with others and with them to share with others. And I hope it brings you guys a lot of value. So I hope that you guys pay it forward, right? So whatever you're great at, help somebody in that field. We're here to pick each other up, especially in hard times like this. We're here to help people. I have a very good friends that, were coaches at one point in my life from football or baseball, friends that I've known since high school that have lost jobs. And this is definitely a tool that you can use now to try to help yourself. And then even if you're just in the learning phase, once you do get back on your feet, it's definitely a tool that you can use to your advantage, so that if something was like this to happen, you would have this side income potentially coming in to help you out, right? So there's a lot of benefits and reasons why I do this to help people. So it's definitely changed my life, and I hope it changes your life in some type of positive way. So thank you guys. I truly, truly appreciate every single one of you. I get up early and excited and ready to go to trade because of you guys. So thank you guys so much. I hope to see you in the room. I mean, you're obviously going to have to join for free if you want that video. But I hope to see you in the paid services and with us for lifetime, or whatever the case. But anyway, thank you guys. I hope you have a great rest of your Saturday. I hope you stay safe. And if this is the last time that I see you, I hope whatever your dreams or whatever your goals are, that you can achieve it. The only person that matters is the person that you see in the mirror. And as long as you're comfortable and know that you're doing everything you can to be a better person every day, that's all that matters. So thank you guys. Have a great night, and I'll see you when I see you.